And what he told you guys, and I hope that you listen to this, what he told you guys that once you learn the basics, once you learn how to identify the right trades, guys, you're going to start looking for more things to take them better, to take them more often, to take them with more confidence, guys. And everything that he said stemmed from the idea that if you learn the basics, you're probably going to be in pretty good shape. Um, so I'm happy to say there's probably not going to be any sort of corrective behavior, but we will talk about stuff that he talked about. We'll look at it in your charts. We'll discuss the idea. Most importantly, and I think one of the things that I hope you got out of it is that you guys are in control of your entries. You guys are in control of how you manage your trades. Don't ever give that power up. So Jen, when you're talking about I'm gonna be smart with this one. Victor, when you're talking about I'm not gonna break my rules on this one. Guys, what you're saying is that I'm in control. That the money is there. I'll get it under my terms. And I know that all of you guys can do it. So before we get into it, news, right? It's Friday, October 31st. Happy Halloween, everybody. And there's no high impact news, so we're not going to worry about it. We're going to go through, we're going to look at our patterns, have a good time. I'm going to reference this a lot, guys. Did you know that every answer to any question you could ever have is really right here in the trading guide? Everything you need, guys, whether it's trading view indicators, whether it's NinjaTrader indicators, all of it's here. The trend and momentum, terminations, entry opportunities, high probability trades, everything that we talk about in the first hour. I don't, Jen. I don't. I've got one more round of golf today. I won't even be home in time. Um, Halloween is, there's people that really get into Halloween. They love to dress up and do it. I'm just not that guy. I never have been. I don't know why. Um, I'm I'm the fuddy-duddy, I guess. Halloween's not my holiday. Um, so everything that you need is already there, guys. We're going to talk about the very, very basic approach. We're going to talk about the idea that it doesn't have to be difficult, that you don't have to know every trade, that you don't have to take every movement in the market, and that's all a byproduct of you learning some very simple rules, learning to read your charts, learning to understand when you have an edge. I got one of my favorite emails yesterday where someone told me that their spouse told them that all they're doing is gambling. All they're doing is gambling. I mean, nothing changes, Jen, in regards to the holiday. Banks don't close. It's just a day rooted in what, pagan lore or whatever, that turned into a reason for kids to get candy. Um, Ron, that's horrible. So guys, we're going to focus on reading indicators because it's your indicator reads that are going to get you where you want to be. Hey, Luciano, good to see you. I'm going to hand you a checklist with 3 rules, 2 charts, regardless of which platform you're on. And we're going to focus on recognizing advantages because advantages are what get you into a trade. Chart reading is about 90% of your day. Did you guys see it yesterday in the very beginning? John Novak, and I'm going to open up a chart real quick. John Novak opened up the automated system chart. The automated system chart that that automates the best of the best entries, guys. The great looking entries, the entries that the large chart says, "Hey, go look for your entry." And when he did it, there were like 5 over the course of the day, maybe coming into it. You're on audio only. You're driving. Happy Friday. Awesome. Cam, 2 hands on the wheel. Pay attention. I'm going to say the same stuff I say every day, so you're not going to miss anything. Enjoy the day off. Enjoy the driving, man. I'll see you on Monday. You're welcome to listen. You're welcome to ask questions, but be safe, please. Guys, you're going to understand through your chart reading where the market is likely to go, where it's likely to stop, where it's likely to continue. And these concepts become ways to enter, ways to manage, and really ways to embrace the idea that 90% of your day is doing nothing. And when you believe that 90% of your day, I don't know what happened to my workspace. when you believe that 90% of your day, it's okay to have it spent doing nothing. It's okay to have um, no entries. It's okay to not have to get into the market, to hope things work out, to wish things would work out, to really want things to work out. What you can do is you start getting into this state of mind. Sorry, I'm trying to get this set up. All of my workspaces went crazy, and I don't know why. You get into this state of mind where you're empowered, where you feel powerful. You feel like, man, I know the market's going to go up and down, but I'm only going to take the one that suits my needs. I'm going to take the one that fits my plan. And when you believe in your plan, what happens is that patience goes up tenfold. When you believe that what you have is the best of the best. When you understand, let me get this back up. These very basic concepts, guys, it's liberating. So we're going to focus on the very, very basic concepts. I introduce the room every day to what we call a high probability trend trade. And this is a trade when all indicators on all charts align with the rules for the trade. This is the perfect trade, guys. This is the best of the best trade. This is the highest probability. That should even spark some positive emotion. This is not the only trade, but if you learn this trade, if you learn the rules for this trade, it will set you up for medium probability trades. It'll have you recognizing low probability trades, and even more so, guys, it'll set you up for understanding HVA trades. It'll set you up for taking momentum trades. It'll set you up to start utilizing the market flow. There you go, Ron. Because what Ron C will tell you is that this may not be your get-rich trade, but this is the trade that will teach you to recognize your get-rich trade. Good morning, Andy V. Good to see you. So guys, I want you to learn how to recognize advantages. Because when you can understand the first three, momentum, path, and entry for the trend trade, it opens the door for everything else. And now the most important message, and you guys didn't even realize you were getting it yesterday, is that you control the entry. That it is your right to say, you know what, I don't like the way this looks. It's your right to say, this is against the trade, I choose not to take it. But when you know what's good and when you know what's bad, that's when you can make those decisions. And I want to go back to what I was just saying, and I totally digressed, is I got the, hey, it's just gambling comment. And I hear this a lot. I tell my friends this is what I do. They're like, oh, you gamble. Guys, gambling, the odds are stacked on the house. You push the button, you get the cards, that's what it is, and you hope for the best. What we teach in this room is probabilities. What we teach in this room is a pattern that you can prove. You can study it, you can recognize it, you can repeat it, you can validate it, you can verify it, and you're looking at a pattern that you have proven through your study is capable and has the potential to win more than it loses. We start with a high probability trend trade on NinjaTrader. This is your foundation, guys, and if you just take the time to learn your foundation, what you'll find is that there is a lot more opportunity. So we're going to take the first hour, it's the same hour every day. You can load the dice. We're going to learn rules. Guys, you can practice and post in the room and keep it simple. I'm gonna consolidate a little bit so we can look at live market stuff today. But we're going to do it on NinjaTrader first, and then we're going to go and we're going to talk about TradingView. And you guys are going to post in the room. And Swathi, I hope that you heard my message that I just talked about. There are three very basic concepts that you need to know. And guys, if you don't take the time to say, this is what I saw. I love the arrows. What do they mean to you? Swathi, your entry is beautiful. Your management is awesome. Your large chart looks pretty spectacular. Do you know why you did it? What were the reasons? So what we're going to do, and you don't have to answer in the room, is we're going to talk about momentum, and we're going to talk about path, and we're going to talk about entry, and then you're going to have to make decisions. So why do they scare you, Swathi? They're just lines. They can't jump off of your computer and bite you on the nose. They're just lines. So guys, if you can identify momentum, it might, and Swathi, a plane might crash through your roof this morning. Are you hiding under tables? No, of course you're not. So Swathi, what we're doing, and this is what I tried to explain, this is the best way to take a trade. But this is a pattern that typically wins 70 to 80% of the time. Swathi, your trade is not the best way to take a trade, but it is a way to take a trade. If you can look at your trade and you can say to yourself, I have momentum, my path is clear, I can define an entry, you know that you're in the best case scenario. Does that make sense, everybody? If I can look at my chart and say I have momentum, my path is clear, I can define an entry, I am in the rock star, best of the best, highest probability, absolutely awesome trade. Guys, what are the chances that that's going to happen a million times a day? Let's be honest here. It's not. So what we do is I say, let's learn how to identify these three things. And if momentum goes away, you know it's not the perfect trade. And if your clear path goes away, you know it's not the perfect trade. And if you can't give it the best of the best entry area, you know it's not the perfect trade. But if you look at your chart and you say, I have incredible momentum, and Swathi, you did, I have a perfectly defined entry, and Swathi, you did, I don't have a clear path. I haven't broken through those one-to-one. Swathi, what it does is it says, with 2 out of 3, it's medium probability. Does that make sense, Swathi? We're using your picture because it's a great example of how everyone in this room is going to move forward. But if you don't understand a clear path, you might think it's the perfect trade. But Swathi, instead of being afraid of these lines, what you're going to say is, I know that it's not perfect. I'm going to take my great entry and I'm going to manage it. I'm going to get out of trouble, or I'm going to get to break even at trouble. I'm going to be a little more aggressive because I know it's not perfect. So guys, if you don't understand momentum, if you can't identify a clear path, and you don't know how to find that beautiful entry that Swathi took, then you're going to be fearful. You're going to say, oh my gosh, this is terrifying. I don't know what this is. But Swathi, what you did is you took a medium probability trade, you took the perfect entry, and you managed it very assertively because it's not the perfect trade. Now let me say something else. You took 10 contracts and you made just 3 points each, 150. It's a $1,000 trade, Swathi, plus. And it happened in a moment or two, right? So what I want you to do, Swathi, and guys, I want you to pay attention to this. Every time you take a trade, and it's not for me, I can see the trades, I want you to remind yourself whether or not you saw momentum, whether or not your path was clear, and how you define your entry. And what happens, Swathi, is you start saying, I have it, it's amazing, I'll take it, I'll manage it, because I know what's happening on my chart. And trading, guys, trading is not gambling. What trading is when I have momentum, when I have this, when I have that, well, now what I can do is I can take and manage. I can take and I can use my chart reading skills to enter, to exit, to do these things. Swathi, it's a beautiful trade. Fear goes away through repetition. Fear goes away with practice. Fear goes away with trust. And Swathi, you are 3 weeks in. 3 weeks in. You're still going to have some fear. You're still going to have a little trepidation. You're going to have some nervousness, and you're still going to make mistakes. That's okay, guys. Give yourself a little grace. If you're new, be new. First year med student doesn't get to do surgery. First year engineer doesn't get to build bridges, guys. They have to build a foundation and build some confidence so that they can do that task. So these 3 rules for the high probability trend trade happen on only 2 charts, guys. There's a large chart that's very slow. You need one bar to define direction, momentum, and areas. And guys, the crazy thing is you're making your decisions for entry at the bottom of the first bar. And then your small chart is all the movement in that bar. It's typically a retracement, a bounce, a continuation. That's how you piece together the trend trade, guys. And you do it like that because you let the large chart lead the way. Because when the large chart has momentum, when the large chart has that clear path, this small chart's nothing more than a vehicle for entry. It's a way to look at it, to say this is where my best entry is, and then you get to make the decision on whether or not to take it. Just need to deposit $500 per contract, right, Victor? Well, Swathi, that's assuming you don't lose a trade. If you put $5,000 per contract in, you can trade those 10 contracts, but if your first trade's a loser, they're going to call you for more money. It's called a margin call. So typically, and most people put about 3 times per contract, more like 1,500. 10 contracts is an aggressive start. It really is, but you have to make your decisions. We're going to talk about areas, guys. We're going to talk about lines on a chart. We're going to have to talk about these areas on large and small charts, guys. They are divergence highs and lows. Just means there was a loss of momentum. I like to think of it, if the buyers are in control, if the market is pushing up, right at this exact point, the seller said, nope, no more up, I'm going to steal your momentum. You see a magenta line. Same thing, sellers in control, the buyers say, yeah, we're going to push it up, we're going to steal some momentum. Cyan line from a low. You're going to see Fibonacci resistance, support, yellow 1-to-1s, mid bands. Guys, I'm going to teach you how to use them to take the highest probability trend trade. You're going to begin to incorporate them to start taking the trades beyond. And now trigger lines. And Jen, I love that you posted this in the room this morning. Jen said that the message she got from yesterday was watch your trigger lines. And guys, your trigger lines do 90% of the heavy lifting. There are small triggers. These are a fast moving average. They're the immediate strength indicator. There are large triggers. These are a slow moving average. They're a little more lackadaisical. They take time to get on with the program. Small and large triggers look the same on both charts. You're going to use them to define momentum. You're going to use them to define termination conditions. You're going to use them to define your amazing entries. Triggers show up in everything that you do. And as John taught yesterday, when you get more in tune with these trigger lines, you're going to make even more and better decisions on your entries. And we'll talk about some of those today. But first, you've got to learn the foundation. You've got to learn the basics, guys. You've got to be able to see what your indicators are telling you so that you can make good decisions. And we're going to start with strong trigger lines. For rule number 1, it's on the large chart, the big chart, the slow chart, guys. And momentum is a pretty easy look. It's separation between the triggers. It is small above the large, space between. It is small below the large, space between. It is one look, guys, like scissors open. And when you have those open scissors on a large chart, you have a market where the odds are favorable for it to continue in the direction of the trend that it's already going. That's rule 1 advantage, guys. It's hard to stop momentum. Momentum has the ability to break key areas. Momentum even covers some of the mistakes that we tend to make as new users. Momentum goes away when the separation goes away. It really is that simple. When there's no longer space between the small and large, you no longer have momentum. Rule number 1 is no longer met. You don't have the advantage of a market where the odds are favorable for it to continue in the direction of the trend. And in fact, the verbiage is anything can happen up or down. This is where you see a market reverse a little bit, maybe from the middle of nowhere. This is where you see a market that at key areas, Fibonacci is more likely to hold. So if you allow it to be very simple in the beginning, very black and white in the beginning, it either is or it is not, what happens is you begin leaning on the idea that as long as I have momentum, I'm going to go look for rule number 2. And if that momentum isn't present, I choose to not look. So we're building a crude oil chart right now. So momentum is separation. Momentum is when areas are separation. This is where areas are most likely to break. This is where the advantages are really in play, this is where you're even going to use those pullbacks on the smaller, faster chart to define your amazing entries. But when momentum goes away, there it is right there. This is where you see bigger pushes. This is where you see the market kind of turn around from the middle of nowhere. So keeping it very, very simple. It either is or it is not. Keeps you focused on a market where the odds are favorable for it to continue down. Does everybody see it right there on the most current bar? Smalls below the large, separation between the two. That is a trigger look that is strong. That is a trigger look that is telling you that based on that momentum, the odds are favorable for the market to continue down in the direction of that trend. Is everybody good with that? This is typically the easiest lesson you'll ever get in this room. Identifying momentum. Once you have it, once you have momentum, I like it when you guys don't say anything. It lets me know that you know everything. You've got to make sure that there's a clear path. You've got to make sure that you can define that there's nothing in the way that could stop that market, that there's nothing in the way that could create an untradeable bounce, that there's nothing in the way that could ruin your good time. And guys, path, and I'm going to say it again, path is the most broken rule. Trading into areas that could stop the market. Well, and Swathi, you're absolutely right. A clear path, a perfect trade, doesn't happen all day long. You may see 3 to 4 a day, Swathi. Does that make sense? 3 to 4 a day. This is why every day, incessantly, I tell you guys that 90% of your day will be waiting. That 90% of your day is sitting on your hands as a brand new user. That 90% of your day is not trading. Clear path makes the trading much easier. Any time of the day. And Swathi, you know about areas that could stop the market long before you get to them. So that resistance could have stopped the market at 4:20 in the morning. You knew about it. Where did that resistance start printing? You knew about that resistance the previous day, actually 2 days prior, at 4:20 in the morning. You had 48 hours notice, Swathi, that red line could create a bounce. Does that make sense? The lines are there. The hard part is choosing not to trade into them when they're more likely to stop the market. And that's why it's so important that you take the time to learn rule number 2. That's why it's so important to recognize when it's a clear path or when it's not, so you can make decisions on whether or not you want to trade. Defining a clear path is really giving yourself the ability to understand, I lost my PowerPoint, sorry. Understanding that decisions by the people that control the market, that large crowd, this is where they typically happen. They happen at Fibonacci resistance, support, yellow 1-to-1s, divergence highs and lows. So I want you guys to get in the habit of when price reaches one of those areas, and John had beautiful examples of it yesterday. If price reaches your bars, the market gets to Fibonacci resistance. If the market turns and goes to Fibonacci support, and this is what it'll look like in the moment, guys, all you have to do is count your triggers. If no triggers are through, if all of your triggers remain below resistance, if all of your triggers remain above support, that's your termination condition. That's the one that should scream to you, I choose not to take a trade into that area. That area could create a bounce. That area could break. That area could reverse the market completely. And the reality is, guys, is I never know what's going to happen. I never know what the decision is going to be. I don't know if it's going to break. I don't know if it's going to hold. I don't know if it's going to, and here's a great example. I don't know if it's going to create a bounce big enough to take me out of a position before it continues in the direction. So for the brand new user, the very basic approach is if price reaches an area and 0 triggers make it through that area, that's your termination condition. That's your sit on your hands. So Swathi, that's your absolutely no trade look. Does that make sense? This is, I got to do nothing. I got to be okay with doing nothing. And if that termination condition, if that textbook, no triggers through termination condition, reverses the market, makes it go the other direction, makes your large triggers roll from green to red or from red to green, then what you have, and I'm going to add this in because John mentioned this yesterday, and I maybe don't lean on it as hard as I should every day. Now you have what's called a strong top or bottom. When price reaches an area, that area reverses on the large chart. This is a strong top. This sets you up for the highest probability trend trade you could ever take. This sets you up for the HVA trade that you guys like to take to try to catch tops and bottoms. This sets you up for the momentum trade. Another trade that you guys can take with the software when you learn these very basics. But if you don't understand a termination condition, you're going to struggle with all the trades that come after the termination condition. Does that make sense? Price reaches Fibonacci support. If it reverses the market, it's a strong bottom. Guys, this look sets you up for the best of the best. This look is when these areas are most likely to break. This look sets you up for medium probability trades, for momentum trades, for high probability trend trades. And all it is your ability to recognize rule number 2. So learn the basics, and just the double doors open wide to the universe of trading. So price reaches an area, no triggers through, no trade. Areas break all the time. And it looks just like this, guys, and it's consistent. The language is consistent. If price reaches an area and none of my triggers break, my highest chance of success is doing nothing, waiting for the reaction. It was said yesterday in the room, you can take that trade, but you're probably going to lose 75% of them. And if probabilities are what drive our entries, the probabilities are gone, the advantage is gone, the edge is no longer there. Guys, with all of that momentum, when 3 of your trigger lines get through an area, that's the best look for the potential to break. When 2 of them get through with a huge level of momentum, that's also the potential to break. And Swathi, what you did is you took a trade, and let's open it up. You took a trade with that potential to break. Do you see it? 2 trigger lines through and all the momentum. And what you were able to say in your brilliant words was, this has the potential to break. If I choose to take a trade, I'll manage assertively. And your ability to recognize that as potential sets you up to take that amazing trade. And that's the second trade that's on the plan that I give you guys. But once small and large, both sets, all 4 trigger lines get below support, now support is broken. Now the path is clear. Guys, this clear path is the highest probability trend trade you could ever take. This potential to break will be the majority of the trend trades that you can take. But you've got to know the difference because it sets you up for management. In an uptrend, when price reaches, when none of the triggers get through, it's okay to sit on your hands. It's all right to wait for the reaction. Remember, you're in control. When 2 or 3 trigger lines get above with all that momentum, you can say to yourself, hey, this is potential. Swathi, pay attention to the next slide that I show. With this potential, with that momentum, guys, there is an enormous amount of opportunity in the market, but it needs to be managed assertively because it's only potential. Small and large both get above resistance. Now it's broken. Now it's the clear path. Now it's the best of the best. Guys, this is your rock star look. This is the easiest look with momentum, with a clear path. Go define your entry. This is the highest probability trend trade you could ever take. This is not the only trade. You could take one with the potential to break. Guys, you may choose to trade into an area, but when you know what you're up against, you know how you're going to have to manage. And then Swathi, this picture, I want you to hang it on your wall. There will be times when your path is not clear, because of stacked areas. There will be times where it's a line after a line after a line. There will be times, Swathi, where you say to yourself, I can't even get a medium probability trade. And you're going to feel like you're never going to make money, and you're going to feel like the world is closing in around you, and how am I ever going to make the money I need to make if I can't get a clear path? Swathi, this is 90% of your day, and everybody in the room, this is 90% of your day. The futures markets, and just for example, we'll say the S&P. The S&P on the average day exchanges $174 million in one trading session. $174 million is exchanged. All you need to be a six-figure trader is $400 a day. So you have to make a choice. Do I need all the trades? Do I have to trade into areas? Does it have to be low probability? Or can I begin to learn a little patience? Can I learn to sit on my hands? Can I find a distraction and wait for the best of the best? Now here's the challenge that a lot of you face. And I'm going to do this, and how many of you are going to identify this? Well, Mark, I only have 2 hours a day in my busy schedule to make all the money I could ever hope to spend, right? I only have 2 hours, Mark, and they're very specific hours. I have to do it between 7 and 9 a.m. I have to make my money here. So what happens if no rules are met between 7 and 9 a.m.? You will convince yourself that there's no opportunities in the market ever. You will begin to force trades in determination conditions. You will begin to break rules because you've decided that the market must produce your rules, your edge, your advantage during the tiny little time frame that you have to use. And guys, if all you have is 2 hours a day, you have to have the willingness to understand that that may be part of somebody else's 90%. That may be part of your 90%. You may not find the opportunities that you're looking for if you limit yourself to a tiny little window. Now, how do you circumvent it a little bit? Swathi, look at the timestamps on Pete's charts. Pete wakes up at about 3 a.m. your time, and he begins trading crude oil because the crude oil session moves pretty amazing in the middle of the night. So you may have to sacrifice. You may have to find different moves. But just because the market doesn't bend itself to your will doesn't mean that the opportunities aren't there. So remember that. We're all busy. I can't trade during classroom hours. I set up before classroom hours. I have a small window after classroom hours. And if my rules aren't met, I simply don't get a trade. And it takes a while to come to terms with that, right? So in that 5 hours, Swathi, I would be floored if you couldn't find opportunity. I don't. You know what I do, Swathi? So which chart leads the way? Big chart or little chart? Do you remember the answer, everybody? It's the big one. So Swathi, if I'm looking at my big chart, and let me go to a picture of a big chart. If I go to a big chart and it's trading directly into a termination condition, if I go to a big chart and there's just no momentum, if I open up a large chart and I say, where's my large chart? You know what? None of my rules are met. I can't find a reason to look for a trade. I'll go toast a bagel. I'll walk the dog. And I'm okay not staring at it. I'll start my day. I'll take notes for work. I'll set up an agenda. But if I'm in a position where my rules could be met, Swathi, I'm not getting out of my chair. I'm saying, uh-oh, I've got 3 triggers through. I've got tons of momentum. I know without hesitation that if I enter in an area inside of triggers that's a medium probability scenario, this is pretty freaking good. I might stay and take that trade. But if the large chart doesn't give it up, I'm not even going to analyze the small chart. And right now, this would be a time where I'm probably not leaving my seat. Does that make sense? So if you don't see it, this is a slow chart. It takes some time. And you always do. You run the risk of missing a trade, not being in front of it, but it's not really your trade if you're not there. So I think patience is one of the biggest things that is developed among new users, guys. And your patience goes up exponentially the more you believe that there is a very easy path to getting to where you want to be. And it starts with momentum, making sure that market is likely to push. And then it's followed with understanding what you're up against regarding those amazing Fibonacci areas that could stop the market. Do I have a clear path? And if you can say to yourself, hey, I have momentum, I have a clear path, well, all you have to do is go define your entry area, go take that trade with the understanding that it's just a pattern, it's probabilities. But this recipe is likely to win more than it loses. And you're going to buy or sell a pullback at an area inside of triggers. This is the best of the best entry. Buy or sell an area, fibs, mid-bands, yellow 1-to-1s, inside of triggers, large and synthetic. And guys, it's a very specific area. And it's a very specific pattern. It's the exact same pattern over and over every day. And one of the things is we are making the decision to enter the market, guys. And I'm going to get a picture just to show it. You know what? Let's do this. Dun, 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 dun. I'm having fun. We're making a decision to enter the market. Come on, pictures. When the market's way up here, when it's the top of that bar on the large chart, guys, there is so much time in this pattern. And when we're making decisions way away from those areas inside of triggers, and there's a lot of time, and it looks the same pretty much every time. First, it's a reversal bar. That signals the beginning of the pullback. Then it's identifying where the pullback's most likely to go with the triggers, and then it's an area inside, guys. And areas inside of triggers are where high probability trend trades originate. Where the best of the best, the easiest, the lowest risk, the highest probability happens when you enter the market at an area inside of triggers. Does that make sense, everybody? Because once you learn the best, you can begin to find other opportunities. In a short trade, it's a reversal bar. It's a pullback to an area. That area is inside of triggers. This is the best of the best trade. And if you remember that recipe, I'm going to go short from an area inside of triggers. I'm going to go long from an area inside of triggers. What you realize is that you have defined the perfect entry, right where the market is likely to continue. The easiest to recognize because the language describes it. And when you have the perfect entry, you know exactly where your stops go. 5 ticks beyond the triggers, where the advantages are lost, where the probabilities are no longer in your favor. 5 ticks below the triggers for a long trade, where the advantage is lost of entry, where you're no longer at the best of the best entry. Guys, this is the highest probability trend trade entry ever. This is the best of the best trend trade ever. This is the foundation that allows you to find more. This is the foundation that allows you to do more. And you're making that decision for entry all the way up here. That's where your reversal bar starts. In this bar, there is a full retracement on the small chart. It doesn't blink on the large chart. You still have momentum and path. And typically, if this is going to be a winner, you have your bounce. If your stop is placed below the triggers where the market shouldn't go, whoop, little money stop there, right? By waiting for the retracement, you have the least amount of risk. You have the furthest room to profits. So guys, when I talk about NinjaTrader, go back and study. Go back, and we're going to open up a large chart real quick and look for momentum. Does everybody see that this is an area with the potential to break, but it's not the perfect trade? It's 3 triggers through, but it's not a clear path. Does that make sense? And this is where we kind of lean on what John Novak talked about yesterday. What you'll do as a brand new user is you'll just take all of them and you'll say, I'm going to take it in an area inside of triggers. And as you grow with the software, you're going to say, well, divergence printed, and that's a loss of momentum. And it wasn't quite one of those strong tops, and that's lessening the chances. And you may choose to not take this trade, or what you may choose is I still see the potential. I embrace the idea that this has the potential to break, but I'm not just going to enter. I'm going to force it to confirm. I'm going to force the market to go in the direction of my trade. I'm going to absolutely insist that I get a down bar with momentum with the potential to break before I enter, guys. And that's your right. And it's through your ability to define the highest probability trend trade from a strong top with strong triggers, with no terminations, with a clearly defined entry. It's from your ability to recognize this one trade that you'll be able to take this medium probability trade. You might not, but you also might, Swathi. Why so negative? Do you really believe? Hold on, watch this. Swathi, you said we might not get another pullback. Get up there. Hold on. I want you to see something. In all of today, and it's 9:29, the market's been open for 30 minutes. There's one, right? And even before midnight, there's a potential entry. And even just after midnight, there's a potential entry. And this right here, recognize this is a place that had potential. I'm not sure if it went. This is a place that had potential. Not sure if it went. That was a termination. That was a termination. That was a termination. This one didn't have momentum, but maybe there was even an opportunity without the momentum with a clear path. We'll take a look. And now this one is medium probability. Do you see how just from today, 1, 2, 3, 4, 5, 6, 7, and we will talk about what's going on right now as the 8th potential spot since the market opened. Does that make sense? All I did is I circled areas where the large chart said, hey, there might be a trade. So let's go back to the small chart. I know it's only potential and divergence printed, and it's not from a strong top. So for the brand new user, so Swathi, if you are shackled to these very basic rules, you don't have a trade because it's not from a strong top, because it has divergence. But as you grow with the software, you might say, you know what, with a down bar here, I'll give it a shot. I'll manage it aggressively. Does that make sense? The very basic plan I give says that this trade is off the table because divergence is one of the biggest killers, because not having a strong top is one of the biggest killers. But some of you are like, I don't want to wait for the perfect trade, Mark. So this is where you exercise your right as the person in charge. Since it's not perfect, hell, if they give me a reversal bar, I'll enter this trade. I'll manage this trade assertively. And if I never get the reversal bar, well then no problem. I avoided a loser. And then we scroll back, and this one doesn't have momentum, but it does have a clear path. And you come back and you say, well, look, I can't define an entry at an area inside of triggers. I'm missing 2 out of 3 in my advantages. Maybe I choose not to take this trade. But do you see how it goes back to, do I have momentum? No. Do I have a clear path? Absolutely. Can I define the perfect entry? Absolutely not. I may choose not to take this trade. Or Swathi, once again, you might say, everything's up and it's clear. If I get confirmation, I'll take this trade. I'll manage it assertively. I'll make sure that I get paid quickly. Doesn't guarantee a winner, but at least you know what you're up against. 3 triggers through, still momentum. There's the pullback to the area inside a trigger. Swathi, if this was the only trade you took this morning, you got in at 55 and you didn't exit until 72, that's $170 per contract on your 10 contracts. That's a $1,700 trade. How much money do you need to make a day to be happy? 1,700 would make me smile like a kid in a candy shop. But if you didn't believe that one, there's your pull back to an area inside of triggers with momentum, with the potential to break from a strong bottom. No divergence, strong trigger. Swathy, this is the perfect trade. This is within your window. And what does it do? It just keeps going. So are you starting to see how it's not perfect? No reversal bar, don't have to take the trade. There is a truckload of opportunity once you understand the very basic concepts. Two divergences. If you took the entry, the third divergence is your management opportunity. That's the perfect entry. So I know that as a brand new user, it feels like there's absolutely no opportunity in the market that follows the rules, guys. I know it feels that way. I've been a new user. But if you keep it basic, if you keep it simple, if you follow a plan that's been proven to win more than it loses in the very beginning to create that confidence, give yourself 30 days. And then by the end of that 30 days, you're absolutely floored at how smart you've become. Does that make sense? And this is something that everybody goes through. All of you in this room will really go through the idea that you're upset, that you're dejected, that you're frustrated, that the market doesn't give you the perfect trade 1,000 times a day so you can make $1 million in the first week, so you can have all that your heart desires. But if you always go back to momentum, path, and entry, you can find an amazing amount of success with this software. And I wanted to go back, and I really wanted to say that, because what John Novak showed you yesterday was that you'll use these very basic concepts, and guys, your small chart tells you a story where you're just scratching the surface, and now you start saying, okay, I see one divergence, I need to be a little more conservative. I know it's not broken, I need to be a little more conservative. So if you said, it has to give me a reversal bar to take this trade, this yellow bar is a reversal bar marker, guys. Force it to hit that. Force it to give you that down bar before you enter, because it's not from a strong top. And it does have divergence. And now the trigger lines are screaming up against you in a medium probability scenario. And guys, if it never happens, you don't take a loser. You don't get frustrated. And it was your ability to read charts that put you in that position. Does that make sense? That was pretty quick. That's a lot of information coming at you. But in the plan that I give, it says don't even look for it. It says don't even consider it. Don't even think about it. Don't even entertain the idea of this trade. And why am I giving you that plan? Because confidence comes from the memory of success. Guys, you are learning to recognize the most successful trade so that you can make amazing decisions on the ones that need a little help with management. Good stuff. That's Ninja Trader. It is the same thing every day. Go study it. Go look at it. Drill it into your mind. Get those patterns. And now, TradingView. All of you guys that are on TradingView, I love TradingView. Funding company people, you're using TradingView. So here's what I'm going to tell you. If you are in the funding company, if you're using TradingView, if you have T3 indicators, what I'm about to share with you right now is the exact same plan that's been used by you guys in this room to not only qualify but find success in the semi-live, guys. And it is, once again, the most basic, foundational, not all-inclusive way to use the software. It is the best, the highest probability, teaching you to recognize advantages and trouble so that you can make good decisions. In regards to indicators on TradingView, guys, it's all the same, almost. There's divergence highs, there's divergence lows, there's one-to-ones, mid-bands, triggers, small and large, all the things that you're used to seeing. The one thing that's different are these zones, because we don't have Fibonacci on there yet. And I'll tell you, if I had my choice, it would always be Fibonacci. But I don't have it here. So there's a company called Chart Prime. They create supply and demand zones. Supply and demand zones are based on historical action, very much like Fibonacci is. They're just a little broader stroke, guys. There's kind of a space, a zone, an area, if you will. And these will behave like areas. They could create bounces, whether it's to keep you out of a trade, whether it's to enter a trade. That's the biggest difference. Um, the time frames. We're not using dynamic Renko on TradingView because we can't. So what it is a 15-minute chart for your big chart. It'll define direction, momentum, key targets, terminations, and it is a 1-minute chart for your small chart. And it seems like, oh my gosh, this is all so new, but it's not. In 2004, Nexgen was teaching with minute charts. Nexgen was teaching trend trades and momentum trades and edge trades with minute charts. Guys, we've been doing this for 30 years. We're good at it, and we've simplified it. Learn the basics. Your small chart, what was that? Confidence comes from the memory of success. Cam, that is one of my favorite phrases. And that's why I keep you guys pulled in. And I'm going to share an email with you guys when we're done with TradingView. Guys, your 1 minute defines immediate strength using the trigger lines. Your 1 minute defines entries. Large chart leads the way. Big crowd, people in control. They make it happen. We're going to take advantage of the yahoos that fight them, get in where they fail, and look for our opportunities. Because of the bar structure, because of the time frame, guys, your large chart, I mean, it's 15 minutes. You could go run a lap around the block in 15 minutes. Are they more familiar with 1 minute than Renko? Right on. And so on your large chart, there's 3 things that happen before you go to the small chart. The same thing. And Paul, I think you said that you spend too much time watching the 1 minute, right? Guys, the large chart's going to tell the story. The large chart's going to give you everything that you need. Your small triggers on the large chart. So if you're one of the people that still have large triggers on your chart, on TradingView, ignore them. TradingView is too stinking slow. Oops, I killed. There we go. TradingView is too slow, guys. There's a very minimal workspace that was provided for you on both. And it takes off the large triggers, it takes off the background color. If your small triggers are going down, brand new users, best of the best, highest probability, go down with them. If the small triggers are going up, highest probability, go up with them. Does it mean that there's not more trades? Of course not. But if you can't make money with the trend, how the hell are you going to make money fighting a trend? Once you define the small triggers as up or down, the next question is, where's the most current price, guys? Is price, the highlighted price, the bar, the moment, is it left of the triggers, right of the triggers, or inside of the triggers? And regardless of whether the market is down or up, is it left of the triggers? Is it inside of the triggers? Is it right of the triggers? Because where the market is now, in the moment, lets you define the momentum. And if you're left at the small triggers, this is the strong side. You guys that like to jump into momentum trades, just jump into a market that's moving without entry rules, this is the best of the best. This is the one that's likely to push. This is the one that carries it further. This is the one that helps you get through those 1 minute areas as you grow. And you could say, with all that strength, my 1 minute area is more likely to break. I might forego rule number 2 and trade into that area. That's a decision that you'll make based on this understanding. If you are right of the small triggers, if the triggers are up and you're below them, if the triggers are down and you're above them, you're still looking for trades in the direction, but this is the weak side, the anything can happen side. The 1 minute areas are more likely to bounce side. This is where quick profits make sense. This is where not hoping for home runs makes sense. This is where you're going to get a little more assertive, and if you're feeling all crazy and want to take some chances, that's not the space to do it from. Because when you're on the weak side of up triggers, that's where the reversal happens. When you're on the weak side of down triggers, that's where the market has the potential to change direction, to go the other way. And we're going to use that concept for entries in just a second here. And then finally, there's transition, guys. Transition is kind of that moment where you're like, it's not the best look, but I probably don't have to get paid instantly at areas and wait for the next trade. I'll do partial profits. I'll take one off. I'll get to break even. I'll manage assertively because it could transition down to weak, or heck, it might go from transition right back to strong. I've got my management hat on, guys. And if you go through this process, here's my direction, here's my momentum. The only thing that you have to ask is, do I have room to targets? Have I mentioned yet that the most broken rule with new users is the room to targets? Is not having space to make any money at all, refusing to give themselves a clear path. Once you have direction, it's up. Once you say, okay, I'm on the strong side, this is amazing, absolutely I have room to targets, then, and only then, do I go to my small chart. And I'm going to give you the first trade, the best trade, the highest probability trade, the most wonderful trade, and probably the one that's about 80%. And this is the trade that gives you everything you need to be successful, even if you never expand from it. I firmly believe that. 15 minutes, not trading, directly into areas. If you can't answer the question, do I have room with a yes, you can't take a trend trade. You don't have rules. Well, you can, but you can't take the best trend trade. And then it reminds you 1 minute not trading directly into areas. 1 minute, giving you room to targets, guys. We all have different ideas of what room is. I want in my life at least $100 before I hit something, because it gives me time to react. It gives me time to protect myself if I need to. But when I don't have areas on the large chart in the way, when I've got room on the small chart, I'm going to go to the 1 minute. I'm going to go to my trend trade entry, guys, and it's buy or sell a close on the correct side of the small triggers at the 1 minute, mid band, or areas. And I'm going to show you how this works. When the large chart says up, the small triggers are up. When the large chart's in transition, see there's the most current price and the bar is in transition. And when there's room to targets, there's nothing in the way. Then and only then do I go to the small chart. Right here where my pointer is, give me a Y if you see that the small triggers are no longer pointing up, that the small triggers have turned down when the large chart says up. Because if you can see that, this is the patience piece. Once I see those small triggers roll, I'm going to look low. I'm going to look for areas, for zones. I'm going to look for mid bands, guys. I'm going to look for something south of that price. And when I get there, this is where trades originate. Trend trades come from areas. If you don't have an area, you don't have a trade. I need an up bar because I want to go up with the large chart. There's your confirmation bar. But I want it to close. I want it to finish. I want it to be done on the weak side of those small triggers against me. And we're just going to call it the correct side of the triggers, because the same way on the 15-minute, reversals come from the weak side of the triggers. On your 1 minute, continuation with underlying trends comes from the weak side of the small triggers. So the moment the triggers roll, I wait for a pullback. When I get there, I don't just jump in. I wait for the up bar with the close on the correct side, guys. This is the easiest trade that you'll ever take on TradingView. And from the moment those triggers rolled, you had 1, 2, 3, 4, 5, 6. You had 7 minutes. 7 minutes of calm, 7 minutes of relaxation, 7 minutes of saying, I know exactly where my trade comes from. I know exactly what I need to see to enter it. 7 minutes is forever in trading. And you'll even have a timer on your 1 minute bar telling you exactly when it's going to close. And if you're following rules, your entry for this trend trade will actually show up on the next bar if you're waiting for the close of the bar. In a downtrend, triggers are down, defines direction. From the strong side of the triggers, best of the best. With room to trouble, nothing in the way. I always answer these questions so I know which direction to go, how I'm going to manage it, and whether or not I have room to get paid. The moment the small triggers roll up, I start looking for my areas that are higher, and I wait for the entry, the down bar, the close on the weak side of the triggers, and that's what sets this trade in motion. And guys, it's the exact same entry every time. It's the exact same look every time. It's the exact same pattern every time. And I'm just trying to see. Looks like they had a pretty straight run down. And I don't know where it started down. So maybe that's not my best example. There we go. Let's see if the S&P gave us one of those good-looking trend trades. Bum, 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 ba-da-da-dum-bum. I don't feel like my zones are on here. But there's a pretty good example. It was down. It was the strong side. It pulled all the way back, just a tick short of the mid-band, gave me a down bar on the correct side of the triggers, and that's where the giant trade happened. And guys, this is repeatable. This happens over and over, every day. The triggers are up. I'm on the weak side of the triggers, and I don't have any room to one-to-ones. I don't have a long trade. And one of the things that was said in the classroom yesterday that I think is pretty cool is when you understand the very basic concepts, when you can look at your, when you can look at your charts and say, all right, the triggers are down, I'm in transition, I don't have room on the small chart, so I've only got one option. It's either going to pull up and give me an entry, or it's going to have to break through and pull back and give me an entry. And now I'm being calm. And there will become a time where on the large chart, if you say, I can't go this direction anymore, you'll begin to find opportunity the other direction. But in the very beginning, trend trades are your easiest. Trend trades are the most common. Trend trades create the most patience. Trend trades have the highest success rate. Last time I did a test, I did a week long, nothing but trend trades, and it was 73% winners. That potential is there, but it will be dependent on your ability to follow the rules. The less common trade is the momentum trade. And the momentum trade is exactly what it sounds like. It's capitalizing on the momentum that you see, that your indicators tell you, to take a trade. So it starts with nothing in the way on the big chart. Recurring theme. 15-minute must be on the strong side because the strong side is the absolute strongest momentum. We want that advantage. 1 minute must have strong triggers, that separation between small and large, that odds favorable. And then to enter, this is the only trade where you're going to use a limit order. And what you're going to do is when it's up, when it's strong, when there's nothing in the way, and only when that's happened, on the small chart, you're going to let price break through trouble, beyond trouble, using that concept that when resistance breaks, it's likely to behave as support. For the brand new user, the easiest way to do it is let there be separation. Let there be a gap between your price and this area. And what you're saying is that if they try to come back and test that area, because of the momentum, I'm going to enter. And you'll wait for it with a limit order right at that area. And it's a very small risk trade. You're just a couple ticks beyond. And if momentum carries it, it's outstanding. And if momentum doesn't carry that trade, if it does go down, your small triggers are going to roll. And this amazing look is probably going to turn into a trend trade. Momentum-based trades that fail very often turn into trend trades, which is why they're very low risk. So from the strong side of down triggers with nothing in the way, price breaks below the zone, pulls back to the zone, and that's your momentum trade. And Victor, you were asking about these yesterday. How do I want to learn them? I want to learn them. The easiest way to do it is first and foremost, force the large chart to be correct. If the large chart's not correct, this one's less likely to work. Focus on trigger lines, because if the trigger lines aren't correct, it's less likely to work. And then Victor, force it in the beginning to create space between the zone that you want to enter at and the price bars. Force it to break below, to get away, to give that gap. And then when it comes back, that's when you take that trade. That's when you use that limit order. That's when it's small risk. The most common mistakes that I see on momentum trades, guys, are not having momentum. Having that fear that the market's going to go without you. Other things I see are believing that getting a tick or two past an area constitutes a broken area. It doesn't. Get the separation, force them to break it, then make them come back to it. That's how this trade works. So, guys, that's TradingView. It's two trades. It's three things. And I'm going to give you these right now. I'm going to give you guys the plans for the KISS plan. I'm going to give you the plan for NinjaTrader, and I'm going to give you the plan for TradingView. Trying to get those in the room right now. And these are your beginner plans. These are the very beginning, the alpha, the start. And both of these plans, at the very top of the plan, say, this plan is a stepping stone in your learning journey, guys. It's designed to teach you how to read your indicators. These trades are designed to optimize your chances of success. And then through study, simulation, class feedback, and practice, you will write a plan that suits your needs. These plans define entry. Great entries create manageable trades, guys. So the more you focus on the process that creates the entry, typically the easier trades become. Because my small triggers have pinched and rolled up, my only option now is to wait for a higher point. Get somewhere further up, and then I'll go through it. Do I have room? Where am I? Is there anything in the way? And I'll make my decision based on those things. So let's get your TV question real quick, Wayne. I answered it in the room. It's a zone. It's a zone. Guys, don't get caught up on colors. If it's a zone, it's a zone. If it's there, it's there. If it's not, it's not. It has something to do, and again, you could go back to Chart Prime and go through their documentation and see if they give you the exact schematic for the color change. But I'm pretty sure it has something to do with where price is in regards to it, Wayne. And because price has gotten low enough on this zone, it's changed red into resistance. But because it hasn't gotten low enough on this one is still showing a support. But what I do, and I think that this goes back to simplicity pays dividends, if my price is caught in this range, if I'm in this area that could stop the market, whether it's the top of the area, whether it's the bottom of the area, whether it's a green area, whether it's a red area, whether it's a dashed line, whether it's a straight line, if I'm in there, I'm in the oh shit, I don't know what's going to happen zone. And I wait for it to get out of it, and then I look for my advantages. Does that make sense, Wayne? It's a good question. And guys, visually, we all get wrapped up on things that aren't important. Visually, we get caught up in these things that maybe have nothing to do with what we're looking for. And that's why on TradingView, because it is so big, so slow, you won't see large triggers. You won't see background colors because they lead us into overthinking. It's down, it's transition, it's room to trouble. I can go look for a trade. Because my small triggers rolled up, I have to wait for a higher push. I have to wait for a clear path, and then I can take a trend trade with a close on the correct side of the triggers to see if the trend wants to continue to the next trouble spot. Pretty cool, right? It's happening right in front of us. Small triggers rolled up, there it goes. Are there any questions? What we have just covered, ladies and gentlemen, is the highest probability. Now I'm going to share something and then I'm going to take a break. I had someone write me an email once, scathing, if you will, and they said, Mark, this is bullshit. Pardon my French, I don't mean to swear. Because Wayne took a trade that wasn't a high probability trend trade, and Alex took a trade that was into an area, and Swathi took a trade, and four triggers weren't through, and Trina took a trade, and Trina didn't wait for the pullback to the areas inside triggers. And they were so mad that people in the room weren't following the most basic plan. And they missed the idea that it's a stepping stone, that it optimizes your chances of success, guys, that you will ultimately write your own plan. One of the things John Novak told me a long time ago, he said, Mark, if you can't make money the easy way, what makes you believe you're going to make it the harder way, the way that requires more skill and more attention? And of course, I ignored him because I'm brilliant, and it bit me in the butt. Guys, the keys to everything is build that foundation, understand the basics. Each day or week, compound, get a little better, do a little more, learn to manage a little more. So for the brand new users, I blanket very conservative rules, recognition of advantages, and I hand you a solid plan that optimizes your chances of success as you learn to read the indicators. So for new users, all terminations are bad. No momentum is bad. Areas beyond the triggers for entry are bad. And we saw that this morning. And Swathi, I don't know if you're still here or listening, but you're caught in that point right now where you feel like you're harnessed into this nonsense plan that doesn't provide any opportunity. Guys, these things aren't always bad. But what happens is when you have these blanket rules, it increases the likelihood of success. And then here we go one more time. Cam, you like this one. Confidence comes from the memory of success, guys. So my hope, my wish, my want for all of you is that you feel success in the beginning, that success comes a little easier, and from that success and from that confidence, you grow your plan. Just like anything, the more time you spend with it, the more you're going to see, and this opens doors. But you've got to learn the process that yields the results, and that's a Mark Douglas idea. The results follow process, guys. The results come from an edge, from an advantage, from a pattern, by trading probabilities. And the more you deviate from the proven, the more the probabilities change up, and not always in your favor. So that's where the KISS plan comes in. If you keep it that basic, follow simple rules, and you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. A lot of you have proven that over and over. I've watched it over the years. The further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. So question everything. If you have a question, post it in the room. If you have a chart, post it in the room. If you're not sure on something, post it in the room. If you don't understand what I just said, say, hey, Mark, what the hell did you just say? Can you say it a different way? I will take care of you. That's my promise. But I want you to learn. But I also want you to give yourself a little grace. I want you to say to yourself, if you're brand new, I'm new. It's okay to not be perfect yet. I can be perfectly adequate by keeping it simple. It's okay to be new. And guys, this was actually a response to an email to somebody that was so mad that you guys were doing great things based on your ability to read the indicators. So there was your close. Do you guys see it? There was your close below triggers from the transition side. And look at the bounce. If you traded directly into an area, if you broke rule number 2, if you hoped that market would go down, even though you were directly into something that could stop it, even though you were in transition and it wasn't most likely to break, you might be having a moment. You might be a little weirded out right now. So first it's momentum, then it's path, then it's entry, guys. Then it's taking advantage. And when you keep it in that order, great things can happen for you. Are there any questions before we take our first break? I'm going to go stretch my legs real quick, guys. I am going to open up the S&P so we can look at a couple different markets. When I come back, we're going to look at the pictures posted in the room. We're going to talk about them. My only request to you guys, I don't put a lot of pressure on you. I really don't. But my request is that if you're going to post in my room, if you're going to ask for help, if you're going to request feedback, at least give me the tools to give you the best feedback, guys. Define momentum, path, and entry. Tell me what you saw so I can make sure that you saw it correctly. And then the next one, if you're on TradingView, define direction, momentum, and path. Let me know what you saw, guys. Let's make sure that you're reading indicators properly. And then a little furthermore, tell me why you entered. And if you took a momentum trade and you lost it, then we get to talk about how there wasn't momentum, right? And if you called this a trend trade, I'm going to say, okay, your close above triggers was probably 3 miles down here. Because this is a momentum trade, it needs to be managed as a momentum trade. And we'll just give you great feedback. And everything that you see and everything you do, all I need is for you to tell me what you saw and did. And if there's a challenge, we'll correct it. And that's really what I'm pretty good at most days. So you have your rules, you have your plans, you can keep it simple, and now it's up to you. It's up to you to put the work in, to take the pictures, to annotate the charts, to learn the patterns, to ask for help. And guys, together, we're just going to get right where you want to be. I'm going to do my part, you're going to do your part, and we're going to start it in just a moment. But first, I'm going to run a lap and stretch my legs and refill my water. You can do the same. See you in 5 minutes, guys. Those great examples where you might say, I have momentum, my path isn't clear, I see the area inside of triggers. If I'm going to take a trade into something that I know could stop the market, if I am hell-bent on going short when I know I've reached a spot that could absolutely drain my account, you could at least force the market to go in the direction of your trade. You could say, if I get a reversal bar, wonderful. And look at that. You didn't. You didn't. No reason to get run over on that trade, guys. When you know what you're up against, you get to make the decisions. That was such a good example. And then one of the things John said, he goes, man, when you can't go short, guys, there are more trades to go the other direction. But if you don't understand the very simple concepts, you're going to struggle to find those trades. You're going to struggle to find the easy trades, the best trades, the highest probability trades. So I'm going to open up the browser here, and I have a couple more that I need to click on. And we're going to look at everything that you guys have posted. We're going to look at the good, the bad, and the ugly, right? We're going to talk about what you did, where you did it, why you did it, what you saw. And I'm not going to play trade police. I'm going to encourage you to not play trade police. Focus on learning momentum, path, and entry, guys, and that's what we're going to talk about. And I'm going to read your annotations, and if I miss anybody's picture, guys, it's an apologies. Repost. All right, weak bottom, not a strong bottom, not the best of the best, not the highest probability scenario, and he recognizes it. It may not even have anything to do with this trade, but he's always looking at where is the market coming from? Is it coming from a termination that reversed it, or is it floating from the middle of space? Then he says, I've got great momentum, separated, wide, 3 triggers through the area. He takes the momentum entry without momentum. And Pete, I love that you put that, because I guarantee he heard my voice going, Pete, how are you going to take a momentum trade without momentum? But here's where the chart read comes in. Pete knows that if this trade fails, because of his large chart read, it's going to turn into a trend trade. And Pete doesn't panic. What Pete does is he goes, okay, if it fails, it's more likely to fail. There's no reason for it to move up. I just want to make sure that if it's an anomaly and it goes without me, I get paid. He just adds contracts at the perfect trend trade. Gets paid at trouble, loss of momentum. Great trade, Pete. And guys, this is taking something that doesn't have anything to do with any rules that Nexgen teaches, incorporating it into his plan, because he knows that every now and then these things just run, and if it doesn't, that's what's coming. And literally, Pete, it's like knowing exactly what the market's going to do more often than it doesn't, and then just finding entries based on that logic. Really great job there. And then doing it on TradingView. Triggers are down, price is on the strong side, you had room to trouble, 64, you jump in what looks like directly into trouble, but if you look at it, guys, he's in at 64, trouble's all the way down here around 58. He has over 180 per contract to get to trouble, makes the decision. And then Pete, the one thing that I maybe don't understand completely is that even though it reached areas, even though it bounced up, even though it came all the way up here, you chose to sit through all of that, which is a little kooky to me, especially since that's a pivot stop out right there. And it does go back down. So here's a thought. And guys, I don't tell you how to trade. I don't give trading advice. This is an educational room. Could you enter here and exit at trouble and then just re-enter on the perfect trend trade and double your profits? And it's up to you, Pete. But I'm telling you guys, there's so much opportunity in the market. You don't have to hope this area doesn't stop it. You don't have to wish that divergence low wasn't there. You can literally take the trade that gets you paid and then just wait for the next one. And then this one gives you the same entry, but you already made $500 here. And it gives you way less risk because you don't have to sit through retracements. It's woulda, coulda, shoulda, right, Pete? But if you have these conversations, guys, if you go back and look at what you did every day, Pete, is going to say, okay, I heard it. I may not incorporate it, but I heard it. And if you see it and hear it enough, guys, it works its way into your vernacular. Momentum, potential to break. If the jump in fails, it turns into the trend trade because of the trigger look here. And Pete, you hold it all the way down. And this time you did have momentum. You had a fighting chance. It still didn't work, but you understand the charts well enough. You understand the patterns well enough. You believe in the strong tops, in the momentum, that you don't hesitate, you don't panic. And I think that these holds are 1,000 times easier on Renko than they are on the TradingView ones, Pete. Great job again. And now this is when everything is screaming and there's nothing in the way. Pete says these sons of guns may not give a pullback. And that's why he does it. And he gets paid quick because it's just momentum, and he knows that these trades fail eventually. And then what a great hold. He waits for the loss of momentum before he exits that momentum trade. When you know what's good, you can recognize that advantage going away. Pete, another awesome one, man. Great job. And then the same thing. Strong triggers, potential to break. That mid band could be problematic, right? It's only 2 triggers through. So Pete says, with all this momentum, I'll take the perfect momentum trade and ride it down to that thing that could cause trouble. And I want to show you guys something. This is the Nexgen momentum trade. And this is what John Novak teaches so well. This termination says no more longs. Does everybody see that? This termination says no more longs. These divergences, that termination, longs are death to accounts. Let's see if we can go short. And that's exactly what it is. I see this, I can't go long. I see this, I can't go long. Well, guess what, guys? Once you understand that longs are off the table, right there is the perfect momentum trade where price breaks through, snaps back to the fib with all that momentum, and rides down. And it's based on that beautiful, strong top. Pete, that is the textbook momentum trade. And it fits every rules, and it reverse engineers the idea that there are no more longs. Now I can find opportunities the other way. And this is where you guys are headed. If you learn the basic concepts, this is exactly where you're going. And when you see all that momentum and there's room to something bouncy, you're going to find a way. Jump the fudge in based on the large chart. It's the phrase based on the large chart that makes it great. If you just jump the fudge in all willy-nilly, you're less likely to win. But if you jump the fudge in because your large chart is screaming and there's room to trouble, guys, you got a pretty good shot. And Pete, you do it well. Nicely done again. Does that make sense, guys? Have you noticed that everything that we've talked about has gone back to momentum and path? Everything that we've talked about has gone back to those 2 core concepts. And once you recognize them, there's a way. It's a weak top, odds favorable momentum, split on the fib. Pete jumps in without momentum again, and it retraces again. Patterns. Turns into a mid band because of the momentum, or turns into a trend trade. He adds on when they come back for him again, never goes where the market shouldn't, and because of all that momentum, sure enough, it makes its way down to Fibonacci support. It makes its way to trouble. More often than not. Pete knows that. I still, and I try not to insert my opinion, I hate these jump ins without momentum. It's fear, right? And if it's going to do this more often than not, why am I shortcutting my trade 3 points on a pullback that I know is more likely to happen? It's a commission killer because you're only making a couple ticks on it. It will, I know. And one day, Pete, I'll stop trying to anticipate entries and my brother will get to stop yelling at me. Oh, I love this. Making decisions. Making decisions because of the strong bottom, because of the momentum. All the momentum on the small chart, no divergence on the small chart, low risk entry on the small chart, aggressive management on the small chart. because the path isn't clear. But with momentum and with entry, he can take and manage. Pete, great job. And what it really is it's just a matter of saying, what's great? What's in favor? What's giving me an edge? How am I going to take it? How am I going to capitalize? 15 minutes up, strong side, clear path. 1 minute, close above triggers directly into a zone, Paul, 100%. But because it's on the strong side, Paul says, you know what? This has the potential to break. I'll keep my stop where the market shouldn't go, below the pivot that gets me in. I'll sit through the sideways, and I'll take it up to Profitville. Beautiful trade, Paul. Guys, this is where understanding that from the strong side, the market's more likely to go up. From the strong side, these areas are more likely to break. And Paul, you took a trade directly into trouble, and trouble created a little bit of headache for you. And then there's the trade. There's the one on the good side of the trouble. So first trade, as a growing, maturing trader, anticipation to break. Second trade with a 100% clear path. One of these will keep you from going bald and turning all your hair gray. But it's an awesome hold, Paul. All right, down bar, small triggers not rolled up, strong exited. So I'm not sure where you took the trade. You were in at 69.50. And at 69.50, Paul, you've got a mid-band, you've got a VWAP. Looks like a possible last-ditch effort on the trend trade that just didn't work. Small triggers don't have to be rolled up. You need the close on the correct side. That was your entry, and that was the failure. So good management, Paul. Good management. Entered past the problem areas, 15 up, strong side, clear path, and you just jump in. And guys, there it is. There's that jump the fudge in trade, hoping that momentum pushes, and it doesn't. It goes absolutely sideways. And then with the small triggers up from the strong side with a clear path, there's your momentum trade right at 58. Eight ticks lower. That's the perfect momentum trade. And then that's the one that runs. So great hold, Paul, because from the strong side with odds favorable momentum, if that area doesn't hold, you don't want it. Nicely done. Nicely done. All right, triggers rolled up. It's an uptrend. Close on the correct side entry, off to the next area. All right, so let's see. The only thing we didn't get here was a pullback to an area. There's a zone. There's a close on the correct side right there. This is the entry maybe. That's where it breaks, pulls back. It's a little muddled. It's really a lot of sideways. And then it goes up. But trading with the large chart. Good stuff. I'm not sure who that was, but that was a good one. Times I question my mental stability. Why question when it's in need of replacement? Warranty expired. I'm stuck with it. 15-minute down, strong side, clear path to retest the VWAP or blow through. Have a great day. 1 minute close below into zone, strength of 15-minute. Will carry, could carry, might carry, has potential, which is what I wanted for profit targets. Of course, I exited trade just when getting good. So I don't see your trade. I don't see an entry. All I see is an exit with everything up and no space down. And the market just went sideways. So, Paul, I don't know what you did, man. All I see is that you got stopped out. I don't know how you entered there. Remember to show me your entries, guys. Can everybody hear me? We doing okay? All right. Trina, I love that you put your name on here. So let's see what happens. Was going to get in at midband, but moved so fast, didn't have time to move anything, moving to the ES. So, Trina, you ready? Let's just talk about it. Did you have momentum? Are you playing your strong trending market game where you say, because it's a strong trending market, I'm going to assume momentum is good, and which is totally cool. And you do have the path. Now, what don't you have, Trina? Don't have areas inside of triggers, right? So what if, hypothetically, you did this? I am going to insist the market give me a reversal bar off that midband or fib to try to enter. Since I can't define my entry with areas inside of triggers. If I don't get a bar, I won't take a trade. Does that make sense, Trina? That's all says down, right? But how are you going to define where you enter? This is where you say, okay, in a strong trending market, sell the midband till it doesn't work. So if they never give any indication off that midband, it's a wonderfully avoidable loser. And this is where you guys have the power, where you get to say, it's not perfect. It's not right. I can't define risk because risk is really defined 5 ticks above those triggers. So if I'm entering all the way up here, where do I put my stop? What if the market goes here? What if it goes here? What if it goes here? What if it goes here and here? You just don't know. So Trina, be strong. Exercise your right. They can't make you get in that market. If your entry's not perfect, you demand, you force. You tell them, you sons of guns are giving me a reversal bar. I'm just not going to do it. Does that make sense? Lars Chart said more down. This is where you guys get to exercise your right as the person in charge just a little bit more. And gold does that. God bless you guys that trade gold. Weak top, all the momentum, 3 triggers through. You do have momentum. You jump the fudge in. You get paid quick because it's only momentum. And you exit with a loss of momentum. Absolutely beautiful, Trina. So much easier, right? When everything is going the same way with strength, it's really hard to stop a market. You did that one beautifully. Nicely done. Page not found. Page not found. So I'll go back and I'll click. Looks like your 3rd and 4th links were dead. So you entered down here. All the way down here. So can we call this a strong top, Trina? Just want to make sure. Price pulls to resistance. Resistance stops the market. All the triggers stay below. And it didn't even have time to reverse. It just stayed down. This is like the strongest, prettiest top ever because your large triggers couldn't even roll against it. But that strong top, Trina, you're 3 days away from it at this point. So what you have down here is, I don't even know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 26. So we don't have a strong trending market because that reversal bar kills the strong trending market. So momentum can't be assumed. You do have a clear path and you do have an area, 2 out of 3. Once again, take and manage. You take it, you enter more, and without that momentum, you're out break even and it just doesn't go. You don't have momentum to push it. You do have a clear path. And you're just not going to sit and hope. And you got paid and went to break even. I love it. Great management. Because I know it's not perfect, I can still take it and manage it. Because I know it's not a high probability trend trade, I can be a little more assertive on getting paid and getting to break even. You did it perfect. Everything that you would want. Nicely done. And then organic, I believe this is you. Is that right? No. Yeah, Wayne. This is Nathan. Organic, we already saw yours. All right, Nathan. How you been? Good to see you in here again. It's good to have you back. You making good grades in college? Better be. All right, let's see what you wrote. All the momentum, right? All the momentum. Triggers breaking through, potential to break. Triggers room, triggers through the one-to-ones, great recognition. Super strong triggers, great recognition. Perfectly identified entry, great recognition. Making money at the trouble that could create problems. And it does work up to the big one. But because you could recognize that it wasn't perfect, you just chose to get paid, right? And from 86 to 91, my goodness, that's $100. That's a $200 trade in what? All of 4 seconds, Nathan? And it's rooted in momentum and the potential to break. It's the understanding that it's not perfect. It's the quick management because it's not. Guys, this is what we try to stress to you guys. There's a million ways to take trades. There are a million ways to do wonderful things with the software. And it looks like John Novak said, check it out. When the large chart's perfect, if the small chart isn't, I can take a trade and manage. I'm assuming that's what that meant. And we'll get the lineup for John here. Boom, boom. Do you guys have any idea how amazing it is that the CEO of the company shows up and gives you guys what he's doing? All right, so no divergence on the high. Trend trade long with the system. Everything is up, the path is clear, there's no divergence on the high. John says, let's take an entry because I can recognize more advantages than disadvantages. The entry, going up, it may win, but not because of me buying this mess. Down here, no divergence, define the entry. Up here, multiple divergences from one-to-ones. John says that's a little problematic. And it pushes lower and it scrambles, and then John makes the decision when it comes back, retests, catch it on the way up, I'm assuming, and it goes to trouble. Nicely done, John. Great patience, not just jumping in hoping, letting it get done with its scramble, looking at your triggers and heading that way. And I love it. Hurt, not easy, nothing hurting, easier long. Notice that there's no divergence on the final pivot, guys. Can I turn this into a little more of a lesson? And I want you guys to see this. I try to say things how my brain works, and sometimes it's different than, it's the exact same lesson. It's the right brain version versus the left brain version is all it is. Divergence means that the sellers are fighting the buyers. It means that there's a loss of momentum. Does that make sense to everybody? I can visually see that right in an area the sellers fought. That means that there's something working against me. Then they did it again. And every time the buyers try to push up, the sellers push back, and they push back, and they push back. And then right here, because there's no divergence, John Novak says, uh-oh, it looks like the sellers just said, done with it. We'll give it a push, but the buyers are rallying. That momentum is coming. They're doing great things. I'll go ahead and get on the side of the buyers because that's what the large chart is doing. Does that make sense, guys? And it's not like there's literally a seller standing there going, no, no more, I'm taking your momentum. But if you start to think about what divergence it is, divergence, and Wayne used to put this on his charts. Sellers say, nope, not going to happen. Sellers say, we're going to fight you. Sellers say, we're going to take your momentum. Sellers say, no, we got some fight in us against these long trades. And then when you're in tune with what you're looking for, guys, and the sellers stop their fight and all of your triggers are above support and the large chart says nothing but up, that's where John Novak says, all right, the sellers lost their fight. The buyers are back in control. Let's giddy up to trouble. And what's funny is I can look at the chart and I can talk through that. And John Novak can look at the chart and he doesn't even have to think about it. It's second nature. But it's that sort of thought process. It's that sort of thought process that is going to get you to where you want to be, that's going to get you to where you can find more, that's going to give you the opportunity to see more, to do more, to think about more, and to find more. Jen, no momentum, 4 triggers through, no divergence, pulls back. You get in right at the area without the fight, and you take it up. Absolutely beautiful. Large chart sets the tone. Small chart gives you the patience to find the right trade. Absolutely gorgeous, Jen. And it all starts on the large chart. And did you guys know? That's it. That's all the pictures. So let's look. Let's look. This is the S&P, guys. Smalls are inside of the large, right? That's not the best momentum. All the triggers are through. That's a pretty good sign for a long trade. Do you guys see how I can't define an area inside of triggers? Does everybody see it? Did I miss yours? Oh, thank you, Victor. I'm so sorry. What am I looking at? I'm looking at triggers are getting through. There is a divergence, so the sellers are fighting. I don't have an area inside of triggers. Is this where you could say, because everything is up, because it's strong, because the path is actually clear, if I get a reversal bar, perhaps I enter and manage. If I see an opportunity, I may take it, but since I know that it's not perfect, I got to be a little more assertive, a little more aggressive, a little more focused on making sure that I give myself an edge, that I manage properly. There it is. They pulled back to the mid-band. That's the first step. But I don't have the best momentum look. They're already showing me divergence. I don't have areas inside of triggers. And even if I wait on a reversal bar, do I have anywhere to go? But you can answer all of these questions from the get-go. If you chose to take the reversal bar, your stop is below it. But with divergence coming from a fib, with the small triggers down, without the momentum to push it, is that your best chance of success? Does that make sense? All I did is start here and then let it funnel down. That's it. And then what was that one? If you took that pullback to the one-to-ones inside of triggers with all the momentum and nothing in the way, do you really need to hope the weak trades work if you're making money on the easy ones? That's pretty cool. Do you guys see the pattern? Strong bottom, full reversal, odds favorable, nothing in the way, no divergence, perfect pullback to the area inside of triggers. Did anybody catch that one? Is anyone going to show me this amazing trade that fit all the rules, that did exactly what the indicator said it would do? Straight from 83 all the way to 88, $250 per contract. That's how you make the money, guys. The money comes from the easy trades. The money comes from the well-managed trades. Pete says, well, I didn't get that one. But when everything's set up and there was nothing in the way, I just jumped the fudge in and hoped for the best. And it worked out because every indicator on every chart set up with absolutely nothing in the way. Nicely done, Pete. All right, Victor. 2 trades on the screen. The first was trading into a termination condition and it went nowhere. I wish Mark would have told me about that. That's awesome. That's my bad, Victor. I should talk to you guys about room to targets. Second trade, trend trade, triggers up, price close on the strong side of the triggers, space to the next trouble area. The triggers rolled after bouncing to the zone. Guys, do the triggers need to roll after bouncing to a zone? Is that your entry, or is your entry a close on the correct side of the triggers? I'm starting to hear that a lot, where you guys mention these triggers rolling. It helps, but it's a close on the correct side. You're in at 92, you're out at 99, and then you're out at trouble. So let's talk management. You were strong side of the triggers, right, Victor? You had the clearest path ever. You had odds favorable momentum. What do we think about this area? More likely to break than hold with all of those advantages? I would say absolutely. I love that you get paid, right? This is where me, personally, my management plan says if I'm on the strong side, if everything's clear, if I have strong triggers here, that area is more likely to absolutely get smashed through than it is to hold. I wouldn't say the same thing if it were transition. I wouldn't say the same thing if it were weak. But this is where defining the large chart momentum helps with small chart management. You get paid, right? And it gives you a bounce. And as it approaches it, your new stop is below that pivot. You got nothing to lose. And sure enough, momentum smashes through it. There's another try and fail, maybe a new stop. Because with strong triggers and you pull back to an HVA, that's a momentum trade. And then strong triggers and you pull back to a zone, that's a momentum trade. So you hide behind the zone. And this is one of those times, guys, where management starts to pay huge dividends, where we're focusing on advantages, not money, keeps you in the great trades, and it gets you out of the trades that aren't the great trades. Victor, it's a beautiful trade, and it's really well done. And management is stuff that I'll talk about, guys, not because I think you did anything wrong. Not because I'm saying, Victor, dang it, you screwed it up. It's because what I'm saying is, Victor, there's so much more opportunity out there. You're so good at entries, you're going to start to learn how to manage trades a little more assertively. You're going to start to loosen up a little bit when you're counting these and stacking these advantages. And that's where trading goes to, because look at this, sugar-free, triggers up, price on the strong side, space to the next area, all the way down to the mid-band. There's your close on the correct side. And Victor, it is easy street, population U. Now let's see where you got out. 07. Same lesson, Victor. You ready? Strong side of the triggers. Room to 09, which is right in the middle of the zone. Odds favorable momentum. Nothing happening other than up, 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 strong. And from 0775 to, and it looks like that was about 10 maybe. It's 2 points, right? It's $40. Doesn't seem like a big deal, right? This is where we pull out the magic calculator. It's not really magic, but it is a calculator, so I'm half right. So check it out. You ready? $40. That's it. That's all. It's tiny. But let's multiply it by 252 trading days a year. It's 10 grand. When all of your indicators tell you exactly where the market is likely to go, when you learn to trust it, it's little bits, it's tiny bits, it's logical holds that really start to compound, guys. They really do. And Victor, when your entry is this amazing, that is like the perfect trend trade. I could teach a class on this entry. By the time you're up here, even if your worst case scenario is you're hiding behind this zone, right? You've got $100 in, you've already made $140. The worst case scenario for this trade is $250. And then when you have that feeling and you're like, man, nothing bad can happen. Life is good. I've made a lot of money with all this strength. Let's see if something breaks. That's where management really starts to come in. That's where reading indicators in the moment really pays dividends. And I'll say it again, and I hate to toot his horn too much, this is where John Novak excels. And if you didn't watch his video yesterday, if you weren't in class yesterday, go watch his video 5 times. Go watch John Novak's videos on tops and bottoms. Go watch John Novak's video on management ideas, because he is the most effective and efficient management guy that I've ever met. It's amazing. And it's all based on triggers. All right, Jen, strong side, not much room to the mid-band. So it actually hit the area, it looks like. There's your area. And then it's coming down. No close above yet, so no trade yet. And just calm and waiting. Now here's one of the things that happens is if you hope the area holds, you get excited and then it doesn't, and you're like, oh my gosh, I hope it holds, and you get excited and it doesn't, and you're like, please let the area hold, and you get excited and it doesn't, and you're like, for the love of everything, won't this area hold? And you get excited and it still doesn't, guys, and you never get that finish on the small side of the triggers, or on the weak side of the small triggers. Have I mentioned yet today that you're in control? That your entry is 100% related to your trigger finger. What is that, the pointer finger on your right or left hand that clicks that button is the only reason that you'll ever find yourself in a trade. It's because you clicked it. If you tried it from the mid band with the reversal bar, there's your second lower divergence, which is even more problematic. It pushes you even lower. All of your triggers are coming below. You're back into trouble. Do you guys see how your indicators told you it's getting progressively worse? Your indicators told you not really likely to work, even worse chance of working, and that darn fib hasn't broken. How many shots can you take and fail before you say, you know what? If they push back above and pull back to this area, not from below this area, then we'll see if we can continue with that strong trending trade. Let's force those small triggers to get up. Let's let them get back above trouble. Let's let price get above trouble and then pull back to it. And then I'll take a shot. And it's the doing nothing that makes life easier. It's the I don't have to be in that makes life easier. Let's see what's going on over here. Oh, this is the automated system. Man, hold on. I guess I'll have to check my settings, but I don't see an entry since this short at the very top from divergence with momentum and a clear path. And it went all the way down. And guys, am I missing it? I don't see any other entries on a system that is hell-bent on only giving the best entries. 90% of your day is doing nothing. 90% of your day is sitting on your hands. Let's see how many lessons there were in here from John Novak. Divergence from a 1-to-1, problematic. Forced confirmation, didn't give it. Here's John Novak's can't go short anymore, maybe I can go long. Multiple divergences from 1-to-1, not a lot to do. Strong triggers, no divergence, pulls up to the trigger. Maybe that's a shot, right? There's those mid bands in a strong trending market. There's those mid bands in a strong trending market. And that's the one that he saw earlier. Wasn't system. Is anyone using the automated system and realizing that it doesn't give you as many trades as you thought an automated system would? And you're like, oh my gosh, where's all the damn arrows? So did anyone get the aha moment that maybe trading isn't about always being busy? That maybe trading isn't about being in every move. Maybe it's about finding the best moves. Maybe it's about finding the highest probability moves. You waiting for the demo? I believe he said it should be soon, Pete. I'm not 100% sure, but I think that there was good news on his programmer. So this is yours today, Morgan. So short trade, room to trouble, and then trouble stopped it. Long trade, room to trouble, and then trouble created a bounce, and that's it. 2 signals. Did you take them? Were they opportunities? Were they good take and manage opportunities? Were there small chart reasons not to? You didn't like the little charts? So show me. Morgan, go to one of your arrows. Let's look at the small chart as well. Let's talk about it if you want. Because what I found is just because I didn't like it doesn't mean that it wasn't a good opportunity. Guys, one of the greatest pictures that you can post in the room, one of the most awesome pictures that you can post in the room is the I didn't take this trade because picture. Because there might be 1,000 reasons to take that trade that you didn't see. Give me the opportunity to be a teacher. There's a lot of movement in the market today. There really is. Is it all high probability? Probably not. Probably not all high probability. Whoops, I just went to my untitled workspace. My apologies. I'm kind of wound up right now. I'm excited. Look at this. There's your termination. There's your reversal. There's your odds favorable momentum. But guys, we have the gap theory in play right now. I know the market could retrace somewhere from the top of these triggers to the bottom of these triggers. I know that the market could bounce somewhere from the areas inside of those triggers. And if I know that my stop goes where the market shouldn't, below the triggers, this could be one of those times where you say, I don't have divergence, my triggers are strong, I'll enter at the high point. Whoops, I don't have management on this, hold on. And if you enter at the high point, I'm going to get it back in there, you might say it could also go to this point. This is what Pete does so well. I'll add on if it goes here because I have momentum and path. I know where my stop goes. I know that this is the highest point. I don't want to miss it. But if it comes lower, all it is the perfect trend trade. You're waiting? I'm trying to do this as an example. The first one gives me the most risk. The lower one gives me less risk. And it's just one of those things. Because of the strong bottom, because of the momentum, because of the area inside of triggers, my rules say, go cat go, rock it out, knock it out, have fun, right? And the KISS plan says if you get a reversal bar in the direction of your trade, 2 ticks below it. But guys, if I get a reversal bar in the direction of my trade, I've already made $100. I'm break even. The KISS plan says get paid at the second spot, $200. That happens to be before trouble. It's a great large chart, right? And the only thing that I can't do is guarantee a winner. The only thing that I can't do is know what the result of this trade is going to be. So I trade probabilities. And with this look, from this bottom, with this momentum, from that area, probabilities say it's more likely to go up than down, about 70 to 80% of the time. So Cam, on termination conditions, 3 divergences in the same price range can stop a trend. On the small chart, that's the small chart termination. That's the small chart saying change is probably coming on the large chart. If you see 3 divergences in the same price range on a large chart, very often it's followed by a pretty awesome move. 1, 2, 3 divergences. That set the bottom in place. That put everything in place for all of the up. So they're valid on both. And they're awesome on both. The small chart 3 divergences will show change that you can't see on the large chart yet. The 3 large chart divergences say that the momentum was stolen 3 times, same price range. There's a really good chance there's going to be a big push the other direction. Does that make sense, Cam? Aaron, you got in on the completely wrong time again on this one? Did you jump in right there into the mid band? Or did you jump in up here hoping that it goes? And if you jumped in up here and it fails and it pulls back to a mid band inside of triggers with this look, that's not so bad, right? That's not so bad. Just means you're not going to make quite as much money as you possibly could. We're going to let this one play out for a second, guys, because we have a whole hour to kill and there's only 2 pictures to present. Does everybody see the momentum? Let's do that real quick. Does everybody see the momentum on the chart? That's the best of the best. And there's absolutely nothing in the way. That's even better. And with this look, I can define right where the market's most likely to trace because of rule number 3. I know without hesitation that an area inside of triggers is where the market's most likely to create a bounce because this is a pattern that repeats itself daily over and over and over and over and over. You jumped in at 99, very top of the move. Fear of missing out. It's the fear of missing out, right? And what you have to do, Aaron, is you've got to do that as many times as it takes to realize that your higher chance of success, that your least amount of risk comes from a little bit lower. So you had every reason to jump in. You had every reason. You had momentum, you had path, you had room to trouble, you had strong triggers. You had every reason to jump into that trade. And that's okay, Aaron. But if that trade fails, the part that I want you to really focus on is if that trade fails, what's the most likely outcome with this look? The most likely outcome is a trend trade. So you have to make the decision. Am I going to sit through the failure? All right, there's our first target. I'm break even on this high probability trend trade. I'm going to cancel the lower order. Why would you not think it's going to retrace, Aaron? So Nexgen has built an empire on the idea that the market retraces to areas inside of triggers. We've been teaching this trade for as long as I can remember. The market retraces to areas inside of triggers, always. We don't teach, hey, just jump in. Never taught it. Why? Because the market retraces. And it's okay. So what you have is a beautiful jump-in trade. So Aaron, what I want you to learn, and I'm not telling you not to do what you were doing. What I want you to learn is I want you to be able to say this without hesitation. If I jump in afraid, the market will not retrace. And I want you to use that word afraid because that's what it is. Will not retrace. I have to accept that with odds favorable momentum and a clear path, if it does, it's just a trend trade. And I either have to exit and re-enter on the trend trade or hold and hope the trend trade works. Does that make sense? I don't think there's anything wrong with your entry. I really don't. But the challenge with these entries, guys, and I'm going to tell you exactly what it is because I've done it 1,000 times. It's still going. Pretty cool, right? And Aaron, I'm not saying this is you. What I'm saying is this is me. Right about here, I say I'm not in a trade. Oh shit, this chart is strong. And right about here, I say I'm still not making money and they're going without me. I can't see any rules met. And right about here, I'm like, that's $200 and I'm not in. And look at this chart. And right about here, I'm like, geez Louise, I don't think this market's ever going to retrace. I better just jump in. And your decision isn't pragmatic. Your decision is really a result. It looks like everybody's getting ice cream without me. I really want to join them. I really want to be a part of this move. I really want to be in this trade. And if you jump in, that's cool. Because with this look, that's exactly where the market's most likely to go. But the challenge is the market retraces, the market fluctuates, the market goes up and down all day long, and this pattern is a hugely repeatable and common pattern in the market, and it's just on a small chart. So I'm going to say it again because I'm not shy about saying it. There's nothing wrong with that entry. But what you have to do is you've got to take that next step. You've got to take that next step that says, if my jump-in trade fails, what's the most likely outcome? Right? And look at this. I've got odds favorable momentum, and I've got a clear path. And Aaron, if I just jump in, my stop has to be way down here. Because if I just jump in, my next trade is a pullback to this area inside of triggers. Does that make sense? Nothing wrong with what you've done, but begin to learn the next step of it, and it's going to take a lot of stress. You don't know. Aaron, you'll never know. So let me read this out loud. Because it didn't retrace from 80 all the way to 99, what I mean is that I don't know how to recognize when it's going to continue up versus when it retraces, pulls back. And so, Aaron, I'm going to let you off the hook. You'll never know. You'll never know if it's going to retrace. Ever. Ever. There's no indication. When the market is straight lining, you don't know when there's somebody here waiting to push it down. You never will. Ever. Stop putting that pressure on yourself. But what you can know, Aaron, and what you can know with absolutely no uncertainty, are you ready? Oh, here we go again. You can know that if you wait for a market with momentum and the potential to break, and if you wait for the pullback to the area inside of triggers, you can identify a pattern that typically wins 70 to 80% of the time. You can recognize a pattern that typically creates success. And Boaz, we're in from the one-to-ones. So we are in a trend trade right now, Boaz. We entered on the pullback to the area inside of triggers, and we're in it. And the point that I'm making is that if you do jump in, all you have to know is that that's the next likely outcome. And I jumped in again at the top right here to make the point. So Aaron, I don't know if they're going to pull back to the area inside of triggers. I just jumped in at 6,100 hoping it goes up. If they do pull back, I know right where they're most likely to go because I have trigger lines. I know right where they're most likely to bounce because I have areas inside of triggers. Does that make sense? So if I jump in, what's the next possible scenario? But you'll never know. Happy Friday, Miss Trina. Have a great weekend. You'll never know. Miss Swathi, will you show me both charts, please, and tell me why you did what you did? Because on your chart, you traded directly into everything. You didn't wait for a pullback, right? You didn't have a clear path. You just jumped in and hoped. And it didn't work, did it? And it didn't retrace just by touching the trigger line, Swathi. It retraced because the sellers pushed right from a key area. And that's exactly what it is, Aaron. It's learning to believe that these patterns repeat. And it's learning to believe that there's advantages to be had. And Miss Swathi, over here, you did have the termination, right? So let's use rule number 3, Swathi. And I love this. The rules say, are you ready? Okay, you don't care if it was a clear path or not. So that's your right. That is your right as a trader. Do whatever you want. I'm not the boss of you. But the rules for entry say buy a pullback. You didn't get a pullback. It says do it at an area. You didn't take a pullback to an area. And it says inside of triggers. And you were not inside of triggers, Swathi. So what you did is you just jumped in and hoped it went up. You know what it did though? Is it pulled right back to an area inside of triggers. It gave you rule number 3 from 86. Where did we get in? It gave you rule number 3 from down around 86, which means while you're sitting through all the fear and pain of the retracement, I've already been paid and I've got nothing to lose. So for sure, if you don't want a clear path, Swathi, whatever, but why would you give up 2/3 of your advantages? Why would you look at your chart and don't answer out loud? This is something you're going to have to wrestle yourself with. Why would you say 2/3 of the reasons to take a great trade are gone? It's low probability. And you said you don't care if it's a clear path or not. So if you're gonna get rid of a clear path, right? It's okay. You're brand new. Let yourself be new. Let yourself be new. You exited because you didn't trust it. You didn't trust it because you're starting to learn the rules, Swathi, and you realize that you broke 2 of them. Does that make sense? You said, I know. I'm starting to break rules. I don't feel comfortable. Remember when you said you were scared of lines earlier? You're scared of lines because you don't know how the market typically reacts yet, but you're getting there. You're seeing momentum, and I do want to address for all of you guys in the room, I don't care that it's not a clear path. About 75% of the time, you're going to lose trades without a clear path, Swathi. 75% of the time. If you knew that 75% of the time you'd get food poisoning if you ate chicken, would you eat chicken? No. If you knew that 75% of the time you walk down the street, you would get mugged and somebody would take your purse, would you ever walk down that street, Swathi? Never. If you knew that 75% of the time an airplane you were in would crash, would you ever get into an airplane? Of course not. So why the hell are you trading into areas that 75% of the time are going to produce a loser? It sounds silly when you say it like that, doesn't it? But this is what trading is. And your brain tells you, but what if it's that 25%? I'm willing to risk my money. What if it's that 20%? Well, Swathi, respectfully and with an enormous amount of love, is you've never taken the time to learn how to identify a termination condition. You keep looking for $1,000 trades, right? You keep looking for $1,000 trades. You stopped looking for the right trades before you ever started learning the software. Now, guys, we took a high probability trend trade. We got paid on the first contract, and it just hit our second contract. Just give me this. Oh, we doubled up. And that's your trade, guys. That's the easy one. So Swathi, you're going to get tired of me saying this, and I'm going to tell you right now, if you get me on the phone, I'm going to tell you the same darn thing I'm telling you right now. Do you see that blue line? And this is everybody in the room. Does everybody see that blue line? Yes. Swathi, do you have at least 2 trigger lines? At the very minimum, 2 trigger lines above that blue line? No. The rules say you're more likely to lose than win, period. This red line has nothing to do with it. Nothing. It's in the distance. This is 2 blocks over behind locked doors. So let's go through it. Do you have momentum? Does everybody see smalls above the large, space between the 2, strong triggers? Does this trade, guys, everybody work with me. Does this trade have momentum? Yes. And then Swathi, you just answered the question for me. Does it have a clear path? Because only 1 trigger line is above. No. So what does that tell me? That tells me I'm working with half the advantages that give me the perfect trade on my large chart. That's all it says. It doesn't say enter, right? Okay. So what's a trend, Swathi? A trend means it's just direction. No, trend is nothing more than direction. Trend isn't an advantage. It's a disadvantage fighting it. But what I go through every day, and I promise you guys, I know it's annoying for you new users that want more. I'm okay annoying you. It doesn't bother me. If the recipe for the perfect trade is momentum, path, and entry, and you look at your chart and you say, I don't have, whoops, you do have momentum. You look at your chart and you say, I don't have a clear path, not even the potential. It's a termination condition. Can we agree that that is exactly what this chart says? It has momentum. No, don't feel guilty. Please don't feel guilty. Swathi, I'm going to tell you right now, and guys, this is for everybody in this room. Those of you that post these questions in the room, those of you that have the courage Swathi has to say, this is what I did, and those of you that have the courage to accept feedback, you guys end up where you want to be. You really do. And Swathi, it took me probably 500 times of trading into these darn termination conditions before I believed it, because I just wanted to get paid the same way you do. So you have momentum, 100%, without question. Best of the best look. I love it. I'm excited about the momentum on the chart. And so Swathi, now I'm saying I don't have a clear path. I don't have nothing in the way. I don't have the ability to say this market hasn't reached an area that could stop it. And Swathi, when you are going to say, I don't care about the termination condition, let me show you what I believe is the most helpful approach. Are you ready? You're going to love this. And I'm going to type it out because I am missing my clear path. I will, and I'm just going to, well, it's already in all caps. I will demand the other two advantages remain in place. Does that make sense? So if you don't know the three advantages individually, this is going to be very difficult for you guys to do. But Swathi, I don't disagree with the concept of taking a trade here. What I do disagree with is putting yourself in a position to take it blindly. Because I have momentum, because I don't have a termination condition, or because I do have a termination condition, I'm going to bet my bottom dollar that my entry better be perfect. Does that make sense, everybody? Because I know what's working against me, I'm going to lean on these other two. Because I know I overcooked dinner, I'm going to bring out the best bottle of wine I have and hope nobody notices. And Swathi, the entry rules, and everybody in the room, the entry rules say that your highest probability entry comes from a pullback to an area inside of triggers. So Swathi, can you ignore the termination condition? You have a better shot if the other two are in play. And that's why every day, guys, and I love this, and Swathi, you have made this class 1,000 times better than it would have been if you didn't ask this question. I can't stress that enough. Cannot stress that enough. If you forego learning these three concepts, it becomes harder to make good decisions. And if you forego learning these three concepts, you start taking nervous trades. And if you ignore these three concepts, you start relying on hope. And guys, this went right to the target. And then it started retracing. Pretty cool, right? There's your pattern. It's perfect. It was a $300 move. Swathi, for you on 10 contracts, it's a $3,000 move, right? Or actually, maybe not quite as much. 300 too? I don't know. 500, it's math. It's a lot. And all it is one pattern. It's just one pattern. So let's go through it again. Do I have momentum? Yes. Do I have a clear path? I'm a tick off. It's close to being no. Do I have an area inside of triggers? I sure do. But now I've got a loss of momentum. Now I've got weakening triggers. Now I don't have the same advantages. This is where you can wait for a reversal bar. And this is where, guys, if you're a tick off of Fibonacci resistance and divergence prints, that's not your best look. These lines are based on thousands upon thousands of calculations. Well, always start on the large chart, Swathi. Momentum, path. And then area. Area inside of triggers. So that's it. It's 2 out of 3 again. 100% Swathy, 2 out of 3. So if you choose to take this trade, your stop goes where the market shouldn't. But because you've said, I do have momentum, I've got room back to trouble, or I don't really have a clear path, if I take this trade, I will manage assertively. I'll look for reasons. Maybe I'll even reduce risk a little bit and say if they blow 5 ticks below the area that should stop it, I'll take a small loss, hoping that it goes. Nope, not a gap fill. Not quite. And this is where you guys are headed because of momentum, because there's room to trouble, right? Because I can define an entry. This is my entry. Doesn't guarantee a win. Because I already got there, because I had divergence, it's less likely to work. The path isn't quite clear. I'm going to have to manage assertively. I'm going to have to say, okay, I'll take quick profits. I'll get to break even pretty quick. Because if this fails, if these areas don't stop the market, guys, who knows where it's going? I don't. But because of the momentum, guys, that's it. That's what we do every day. Does that make sense, everybody? So we'll go and see what Ed did. The market doesn't have momentum. It's on the wrong side of the clear path. That's a tough look, Ed. It looks like it worked out for you, or I don't know where you're in from. But I don't have momentum. I'm trading into trouble. And you're looking for the area inside of triggers for a long trade. I don't blame you. These don't make sense, though, because this is a limit order without a trade. That's a trade that already happened. I don't know what the large chart's doing, Ed. You held that away from me there. Maybe this is the better picture. Clear path, not quite momentum. Pull back to the area inside of triggers with every indicator up. And Ed says this 1-to-1 without the momentum could mess things up. I'll protect myself. Will patience pay? Nope, you got stopped out. So, and let me look at the next picture before I go after you. What's rule number 1, ladies and gentlemen? Momentum, right? Why do you suppose rule number 1 is momentum? Because without momentum, anything can happen. Without momentum, who knows? With the smalls below the large, who knows? Nobody. Guys, momentum is rule number 1 for a reason. And without the advantage of momentum, stuff like this happens. Because there's nothing pushing the market up. Does that make sense, everybody? When there is no momentum, you don't know if the market's going to go up. You're hoping the market goes up. And if you keep adding on to positions without that first advantage, you're more likely to lose than win. But when you have momentum, the market is more likely to go up. Congratulations, you guys hit your first target. You're already break even. Your next target's right at trouble, and it was all dependent on momentum and path. So is this the only trade? No. Is this the best trade? You're damn right it is. Guys, momentum is rule number 1. Rule number 1 is rule number 1 for a reason. Because when your large chart says up with momentum and nothing in the way, it's difficult to stop. Does that make sense? That's what I want you guys to lean on. And when that momentum goes away, I want you to just say, to hell with it. It's coming back. I'll wait. Strong trending market. Buy a mid-band till it doesn't work. Missed it. There's the mid-band. Just run it. Beautiful. Beautiful. In a strong trending market, 30 bars, nothing in the way. Buy the mid-band till it stops working. And guys, do you know which trade is going to stop working? Do you want to know how to know? You guys that need that absolute, you guys want to know which trade's going to stop working? The last one. The last trade will stop working. It'll stop you out. It'll take your money. But you don't know which one's going to be the last one. Great trade, Boaz. Great looking trade. It's got to go, but it didn't. It needs to go, but it didn't. It has to go, but it didn't. And then suddenly it's momentum and everything says down. Let's go short with it. Right? Good luck, Ed. I'm rooting for you. I'm rooting for you. You know what's weird? Is I don't see your system looking for any trades, Ed. And that's your right. But if your system is based on the greatest entries ever, and you paid $5,000 for that system, a little trust goes a long way. And you're still in a long trade here, getting absolutely slaughtered as you add on to your losing position. So, guys, Nexgen is just a tool. That's all it is. It's just a tool. You're telling me that the system went long against down triggers 3 times? So what I'm saying though, so the 5-1 is you live, right? The 5-1 is you making decisions based on your guts. The system that you paid $5,000 for to help you identify the perfect trade hasn't given you a trade, and you said, F it, it must be wrong. I'm going to do this one. Ed, I love this. Odds favorable momentum, you're below anything that could create a bounce, and you jump the fudge in, right? Or did you get stopped out? That's that chili dog trade. That's a good one. Stopped out. That's you getting stopped out, fighting everything on the large chart, fighting everything on the small chart. There's a lesson there, Ed. There really is. Your guts are not calibrated. Not at all. I've realized that. Your guts aren't calibrated. All right. Momentum. 3 triggers through. Take the entry with strong triggers. Manage it assertively. And then when you get a pivot, stop out. Guys, this is the exact lesson that John Novak gave yesterday. The exact lesson that John Novak gave yesterday. If you get a pivot stop out and your triggers are below it, that thing's not working. Good job exiting the trade, Boaz. Don't give up any money, right? Divergence. Got scared, sell the first really, really fast. Yeah. Second sell on the second. So it's a break-even trade for the most part. So one of the things, Boaz, and this is a NASDAQ thing. This is a pattern that you see a lot on NASDAQ. If you get in down here and these small triggers are way up here, I'll typically at least hold for the small triggers. Maybe I'll get paid at them because they can create a bounce, and maybe it'll buy you a couple ticks as you work on it. Watch that pattern. Watch how price tends to suck back to those small triggers, because remember, this is a 13-2. That's a big chart. There's a whole lot going on that chart. Guys, we're still in this trade. We got in, we made money, we jumped in, we made money, we got in, we made money. I have nothing to lose, and everything still says up. Do you guys see that? Is there anything on my large chart that says this trade is in a bad spot? What do you guys think? Anybody, can you find anything? I can't. What changed? Well, price got above small triggers. That's better. Small triggers are rolling. That's better. Every indicator is up. That's better. Haven't had a divergence. Haven't hit anything. I've already gotten paid. I can't lose. Holy smokes. I'll go 2 ticks below that one, because if a lower divergence prints, it's an exit condition. Guys, the worst I can do on this trade is 120 bucks. And it all starts with momentum and path, doesn't it? Do you guys see it? First, it's momentum and path. Define your entry. If you jumped in, Aaron, this was for you. Can you see it, Aaron? Are you still here? If you jumped in and said, oh shit, I sure hope it doesn't miss me. Aaron, where did it go? when the jump-in trade failed, what happened to it? With momentum and path, when you jumped in and it failed, what happened to that trade? It pulled back to an area inside of triggers because the large chart leads the way. Isn't that awesome? Do I like how I do, Cam? Cam, I am not a smart man. True story. I hate to break it to you guys that have this illusion of me. I'm not a smart man. And if I have a fib on this chart, I want to see it on my large chart. And I'm going to tell you why, Cam. Are you still driving or are you in front? I don't want you driving down the road studying this picture having an accident. Okay, cool. I'm going to show you guys a little something about the basic workspaces. On a large chart, there are 3 time frames worth of Fibonacci, guys. On your large chart, on the 5-1, if you're using a 13-2-5-1 setup, you're going to see skinny lines that don't extend all the way to the right. These are the fibs on the 5-1. They are superimposed. We call them synthetic fibs. There are great big fat fibs, and they don't extend all the way to the right. These are from an even higher time frame, the 21-3. These are synthetic fibs because they're pulled from other time frames. You also have skinny Fibonacci lines that extend off into the great beyond. These are native to the 13-1. When John Novak created these workspaces, he said, in order to have the highest chance of success, I need to use all 3 time frames. I need to use a higher time frame that produces fibs based on tens of thousands of calculations. I need to use a lower time frame that creates fibs based on tens of thousands of calculations. And I need to use the native time frame that creates fibs based on tens of thousands of calculations. Are you guys with me so far? So these 3 fib areas are all equally important, Cam. And I want you to see what I mean. Here, price reached a 21 fib, and it stopped it cold. Here, price reached a divergence low, and the market stopped and bounced. Here, it reached a yellow 1-to-1, and the market reversed and went lower. Here, a 13-2 broke and was retested as resistance. Down here, a 13-2 stopped the market. Right here, a 5-1 fib stopped the market. Do you guys see what I'm doing here? Each and every one of these lines is important. If you take them off of your large chart believing that they don't magically exist, man, you're setting yourself up for failure, guys. John Novak spent decades making this the best software on the planet. Why would you rob yourself of those advantages, right? So Cam, absolutely. And now let me show you something else. If you're like, it's a resource killer. It's a resource killer. Cam, this is not a clear path, is it? It looks like it on the large chart, but you have to say to yourself, the way John Novak intended this software to be, I need to see that line. I need to see that line on the large chart to give me the highest chance of success. So if your resource, oh look guys, we did it again. We did it again. All right, are you guys ready to see something that is like 32 flavors of kick-ass? Does that make sense, Cam? Just run the templates. Take advantage of having John Novak's genius with absolutely no need to overthink it. So this trade, these 2 trades, this $610 happened in this little space on the market. Swathi, I think you're there. The large chart template, guys, if you go to templates, and I think you're already there, Swathi, you're okay. Nexgen 13.2 Rinko. That's it. Nexgen 13.2 Rinko. That's your best of the best. That's the one that gives you all of them. And guys, if you don't have tick replay, you won't see it. So make sure your tick replay is in play. And then Swathi, I'm glad you're still in here. This was $610 on 2 contracts. Look at where it happened in the day. Hold on, let's do it this way. Look at where that $610 happened in the day. It's one itty bitty moment in time, waiting for the best of the best. And this is, when you see this enough, guys, this is what builds the confidence and the patience. Because you realize that you don't have to be in every move. Do you guys see that? This is the whole day. That's where the $600 was made. Do you have to trade in determination conditions? No. Do you have to trade without momentum? Absolutely not. Do you have to jump in at areas that aren't inside of triggers? Hell no. Guys, there's plenty of money to be made. It's going around. There's a recipe for easy, and then there's a million options beyond easy. But if you don't learn easy, it's just hard. And even more importantly, if you don't trust easy, it's hard. Don't understand why system is still long and generates a short. I don't know. Get with my guess, and I'm going to tell you exactly why. Ed, your system doesn't know you're in a position. Your system knows if the rules are met. You're still in some crazy long trade that you hoped would work, and your stop is still all the way down here, and it says it's on a demo account. I hope it is. Then get with Tech Ed. I can't tell you. I don't know. I don't know. And when you three know me and the last one's in all cap, get with Tech. Let him get on your computer. Let him talk you through it. I don't know. I don't know. But when the system says the entry's perfect, when you take the perfect entry, I'll be damned it goes right where it's supposed to. Do you guys see it? Momentum, path, pull back to the area inside of triggers. And what a great place to get paid. And Ed says, it's screaming. I'll put a stop there. So what's the hard thing? Skipping all the nonsense trades. What's the hard thing? Not fighting triggers. What's the hard thing? Not trading in determination conditions. Right? Nice trade. Great trade. Now, I know you're okay, but I know that you get emotional about it, and we all do. Ed, yours is not an inability to do the right thing. Yours is an inability to not do the wrong thing. That's everybody's in the beginning. Swathi, don't do that to me. Are you ready? Don't do that to me. What pullback are you talking about? Are you talking about the one directly into a termination condition? Are you talking about the one directly into a termination condition? Which pullback, Swathi? Which one? Cam, you see the light? I love it. The market went roller coastery and I closed out right before it went haywire. Guys, you're missing the point. You're missing the point. Everyone appears to be missing the point. So yes or no, do you see the termination condition? If you don't, let me know. Okay. This one didn't hit it. That was an easy win up to the termination condition. Do you see it? This is where the easy money is made. This is where the easy money is made. Guys, when you get here, every buyer that took over at this fib, every buyer that entered and made that market go up, every buyer that took you to your target is done. The sellers fought right at a key area and said, hey, here we come. And the sellers fought again and said, seriously, guys, we don't want it to go up anymore. And then they said it for the third time. For the love of fuzzy, stop going long. We want it to go down. And then Aaron, guess what? Freaking haywire. Freaking haywire. And you said on the large chart, yes, but on the small chart, price reached the large chart termination. Your rules, Aaron, said absolutely no more trades. at 11:42. At 11:42, maybe even sooner, right here, at 11:42 and 42 seconds, your large chart rules said absolutely no more trades. Does that make sense? Everybody in the room, at 11:42 and 42 seconds, your large chart reached Fibonacci resistance. Do you see it, Aaron? Here, watch this. In the moment, let me show you what it looked at. At 11:42 and 42 seconds, Aaron, price reached resistance and the triggers weren't broken. Do you see that as a termination condition? That's what I need to know. Aaron, you're in a different time zone, brother. You got different fibs than me. You got different fibs than me. So Aaron, you had momentum and path. 3 divergences. If you took this trade, that third divergence was your reason to exit. Why didn't you take this perfect trade? Why didn't you take this not quite perfect trade? And this is where learning the rules pays dividends. Swathi, sometimes it works as pullback and the momentum continues. Swathi, 75% of the time you get food poisoning. Yeah, Aaron, it's because they reacted to the area. There's your lower divergence. It was true before it ever reached. Swathi, this is your 75% of the time food poisoning, right? And look at it. There it is again. And there it is again. And let's just go look. And again. And there it is at support. And there it is at a divergence low. And there it is at resistance. And just over and over. And Swathi, if you build a trading plan on the one time it works versus the 9 times it doesn't, you're going to lose more than you win. That's gambling. Does that make sense? Trading into an area that could stop the market is gambling. And Aaron, if you were in that, I don't know how quick that happened. So on your chart, I'm going to try and make mine do like yours. Because we're in different time frames, it's going to be a little different for us. You've got different fibs. But it was right here where divergence was true, 45.19. And just, guys, look at the speed, 45.19, 45.19, 45.19, 45.19, 45.19, 45.19, 19, 20. It was 10 bars in a second. 10 bars in a second, Aaron. That's tough. But with the third divergence potential, this is where small chart terminations come in. If you've already got a pivot stop out with triggers below, it's less likely to go up. If you've already had 2 divergences, the fight is already on. And if that third divergence prints, it's just no trade. And that third divergence printed before it hit the midband, before it hit your fib, which means that in a perfect world, and it happened fast, and if you had a limit order there, you may not have been able to stop it. But in a perfect world, once that third divergence prints, it's no trade. And Aaron, sometimes it will go faster. And sometimes they'll react, and sometimes they'll push, and sometimes you won't be able to time it out. These multiple divergences give you a heads up that the fight is coming. It's not that they're better. It's just different. And anyone in this room that has had fibs from a different time frame will tell you that sometimes it looks like I have an advantage and sometimes it'll look like you have an advantage. And it's just, Fibonacci doesn't know. Fibonacci is just a matter of up and down and measurement. But if we're 3 hours off, I had 3 extra hours to create fibs. I had 3 hours worth of up and down on multiple time frames to create my fibs, so they just don't line up the same. If you want to be with me, if you want to have the same looks as me, you will need to go to that Eastern time zone. and then we can line up if that helps. And Ed, I like that you got paid, man. Getting paid is what it's all about. Morgan, what did you type on this? Auto Trader just knocked your socks off with this one. So Auto Trader taking the best trade with momentum from a termination, everything down. That's a pretty good move, isn't it? And it called it. Ed, that's the one you took, right? Got out at support. Nothing wrong with that. But it's still smalls below the large, larger down, nothing in the way. Giddy up. That's your trade, guys. That's the easy one. That's the one that wins more than it loses. You can prove it if you go back and test it. Everything is up. There's the first one, kind of break even on it. Great entries. Great entries make manageable trades. There's the second one, perfect. Easy money, off at trouble. Nicely done, Pete. That sure looks familiar. And went big with 4 contracts because the large chart looks so good. It's momentum and path, guys. It's momentum and path. Learn these very basic concepts. They'll take you to the promised land. And as you learn them, let me say it again, because I believe this from my heart, you will make mistakes. You will hesitate. You'll make bad decisions. You'll mismanage trades. You'll hope, you'll wish, you'll want, you'll pray, and you'll ignore everything that your indicators say because you're new. But let's go back. And I want you guys to tell me, and I'm just going to use Pete's picture. Confidence comes from the memory of success. If you went back, everyone's different, Swathi. I started thinking girls were neat around 4th grade. It took me up until about 7th or 8th grade till I got the confidence to kiss one. But I was hooked from that point on. So everybody's different. Everybody's different. Do you want to know what shortens it, Swathi? Do you want to know how most people get there faster? I can do that. I can tell you how to shorten the time. And Swathi, I've already told it to you 100 times. I won't ever change my story. If you really want to learn how to get to where you want to be faster, you have to learn momentum, strong triggers, and you have to believe that that's an advantage you don't want to do without. And you have to learn how to define a termination condition, and you have to be able to do it fast and in the moment. And there has to be a part of you that says, if I have strong triggers and a clear path, then I need a pullback to an area inside of triggers. And if you really want to get to where you want to be the absolute fastest, Swathi, you will lean on this trade. You won't just trade and hope you become a great trader, right? You won't go just, oh, you know what? I'm going to be a tennis star. I'm going to walk onto the tennis court. I'm going to walk onto the golf course. I'm going to go play Major League Baseball. You're going to get some work done. And Swathi, if you're not taking pictures of strong triggers without taking a trade, you're making it take longer. And if you're not going back and taking pictures of a clear path without taking a trade, you're making it take longer. And if you can't define the perfect entry, you're making it take longer. So Swathi, what's the fastest way to get there? Stop trading for an afternoon. Just stop trading for an afternoon. Blow up a big chart and take a picture of whatever you see. Oops. Just take a picture of whatever you see. Doesn't matter. And do this. Are you ready? Draw an arrow and take the time to type out. Smalls below large, space between. This is strong triggers. Rule 1 met. How long did that take, guys? 8 seconds, 10 seconds? That's how you're going to figure out strong triggers. And then here we go again. I don't know what you guys do professionally. I I was an English lit major. I'm a big fan of language. Price reached an area. Triggers stayed below resistance. This is a term. Rule 2, not met. Well, you don't even need my correction, Swathi. Watch this. I'm going to give you a cheat sheet. Doesn't this price reached an area, triggers didn't break, doesn't that define that termination condition as well? As well as this one? As well as that one? It's the same language over and over. So I'm going to give you guys something. For you guys that really want to be where you want to be, and then Cam, I'm going to lean on you again because I appreciate that you've done this. So Cam has started doing this process in efforts to get better. And Cam told me yesterday, or day before yesterday, that he already feels like he's a better chart reader based on his doing this. So I'm going to give you guys this. This is Chart Reading 101. Everything that I just asked you to do is right here. Oh, that's for TradingView. So if you're in TradingView, there's one as well. So Swathi and all of you guys that want to get there faster, take 25 pictures each. Strong triggers, weak triggers, clear path, termination. Take the time to annotate the chart so that you create a correlation between what your eyes see and what it means to you. That's what the typing does, guys. The typing is the most avoided part of it. It's the typing. It's taking the time to type out exactly why rule 1 is met. It's taking the time to type out exactly why that's a termination. And now your brain just starts to put the looks and the words together. Trust me, it's science. Do it. You don't have to do it all in a day. Do 15 pictures a day, guys. That's 300 pictures in a month. You're going to be pretty darn good at this. But I'm not just going to stop there. Because Swathi, if you put every one of these pictures in the room, eventually you would get bored and you'd hear the same thing and you would go check out before you ever did it. So watch this. This is the high probability trend trade checklist. So for you guys that are taking these pictures, this one's not even on there. But remember when I said that the best trades you could ever take come from a termination that reverses the market? There's a picture of exactly what it looks like. So if you're taking pictures of strong tops and bottoms, from a strong top, it has to look just like this. From a strong bottom, it has to look just like that. And if it doesn't, guess what? It's not. And if you're taking pictures of momentum, it has to look like this. And if it looks like that, it's not momentum. So here's your cheat sheet, picture takers. Is it a termination? Is it only the potential? Is it a clear path? Once again, there's your cheat sheet. Did it pull back to an area inside of triggers, guys? There is absolutely no reason for you to not get good at this. And what I'm giving you right now, Chart Reading 101, the high probability trend trade checklists, you don't have to be in a trade to do this. You don't have to be in the market to recognize momentum. You don't have to be in the market to understand termination conditions. You don't have to be anxiety ridden, looking at oh my gosh, I hope I don't lose, to know that that's a termination with weak triggers and it's more likely to push up than it is down. You're going to get all that from your pictures. And let me show you what that's going to do for you. Are you ready, all you new guys? You're going to say, I have momentum, my path is clear, I don't have an area inside of triggers. If I choose to take this trade, it has to come from a reversal bar from the area. That's how fast your chart read will happen. Now, it's unrealistic to think that you can do that right now, isn't it? It's unrealistic to believe that you could identify momentum in a fraction of a second. But after 25 pictures of it, you certainly will. It's unrealistic to believe that you would know that's a clear path without ever having studied clear path. But with a little bit of study, you'll recognize it. And Aaron, why don't we just arbitrarily jump in? Because this is always an option and I never know when it's coming. So if I do jump in, I better be ready to manage that mofo because the market fluctuates all day long. So guys, we all want to be professional day traders, we all want to be rich. We all want to get to the end before we ever take the time to learn how to get to the end. This is the checklist on the second page of your cheat sheet. Nobody in the history of this checklist has been able to follow it to the letter and show me less than 70% winners, guys. Never. Never in the history. John Novak started his class yesterday, and he said it's not that people aren't able to learn the rules. It's that people refuse to participate, and they have their own version of what it means to have the rules met. That's where participation pays dividends, guys. That's where taking the time to get a little bit of feedback to say, hey, check it out, Nathan. You didn't have momentum, right? And if you don't have momentum, that area is less likely to break. And if you don't have the momentum to help you break that area, and you have divergence, which is even less momentum, and you have weak triggers, which is even less momentum, and you're beyond the point where the market is most likely to continue, why the hell are you taking that trade expecting to win? When you don't have one of your three advantages in play. Does that make sense, Nathan? No momentum, not a clear path, no area inside of triggers. Holy crap, that's an avoidable loss. But Nathan, if you don't make this mistake, I don't get to say it. And you might think you took the perfect trade and the market hates you, right? But Nathan, I know you're in a different spot than that. Because you put maybe wait for a down bar. And what I would probably put is, hell yeah, I have to wait for a down bar. I don't have anything working for me. I don't have the advantage of momentum. My path isn't clear. I can't define an entry. Shit. I'm at least going to make my small chart go in the direction of the trade. So Nathan, knowing what you know right now in this moment, is there any reason to lose this trade? As somebody that can recognize advantages? No. Is there any reason to lose it? No. But guys, if you don't trust the process, if you don't believe in the methodology, if you're not sold on the idea that momentum pushes a market, that a clear path makes it easier, that anything beyond the triggers is the wrong side of the triggers, you're going to keep taking this trade and getting your butt kicked. Cam, have a good one, man. Thank you for all the time you spend talking in my room. It's an avoidable loss. All the momentum, all of the path, none of the area inside of triggers, and sure enough, it pushes up. So guys, don't get down on yourself if you're not there. Don't beat yourself up if you're not proficient in the first month. It's very much, and I say this without hesitation, if you feel like you're spinning your wheels, if you feel like you're struggling, it's because you're trying to make trading harder than it needs to be. It's because you didn't bother to learn the rules. It's because you're not asking for help, or it's because you're not willing to keep it simple yet. Let it be easy, guys. Let it be simple. Let it be focused. Participate lots. You'll get to where you want to be. So everybody's homework over the weekend that tells me that they want to be a professional trader is to use that chart reading one-to-one. And go start taking some pictures. And if you need help, bring 2 or 3 of each to the room if you're unsure. But use that chart reading 101. Use that high probability trend trade checklist. Get some study under your belt. And guys, don't just look at them and take pictures. Fill your spreadsheet. Study your spreadsheet. Make it easy. All right, guys, that's all I got. What an awesome day. Great.